It's 12:30 on the dot. Let's start. Hello and thank you for joining. Welcome to the Virtual Management Accounting Conference, Switzerland. Why am I not progressing? There you go. There's a lag. Just give me 1 second. Before we progress, I would like to inform you that this event is being recorded. By participating, you are giving your consent to the recording. Please follow basic rules of internet etiquette during the entire event in the chat, virtual networking session, elevator pitches, and especially when asking a question. Non-compliance with internet etiquette will result in a removal from the event. If you happen to experience technical difficulty, please try logging on again using the event link in the Zoom confirmation email. In case we experience any technical difficulties, please be patient and stay online for up to 10 minutes until the issue is resolved. Of course, we would communicate further steps in the unlikely event of technical problems. My name is Bernardin General Lau, and I'm Director of Regional Partner Relations for IMA, the Institute of Management Accountants in Europe, based out of Zurich. And I'm also joined by my colleague.
Good afternoon, everyone. My name is Alain Mulder, Senior Director Europe Operations at IMA, Institute of Management Accountants, based out of Amsterdam. Just a brief introduction about IMA. We are one of the largest and most respected associations focused exclusively on advancing the management accounting profession. We are proud to support our members and the profession through research, CMA, Certified Management Accountant Program, continuing education, networking, and advocacy of the highest ethical business practices. Our members are located all over the world and are supported regionally out of offices that you see on this map. Leading the Europe team, Bernardin and I work with corporations, universities, students, partner associations, course providers, members, and chapter leaders, and other stakeholders all across the region. In these current times, IMA's approach has been simple: to demonstrate social responsibility for the safety and well-being of our stakeholders, including our staff, our professionals and students, and our partners. All of the conferences happening across Europe, some which are organized by the local chapter leaders, had to be rescheduled to a later date, or have been converted to a virtual event, such as this one. And before I forget, if you would like to post screenshots of this event on social media, especially on LinkedIn, please use the hashtag IMAToday. In collaboration with the IMA Amsterdam chapter, we have organized a virtual CFO Insights conference to take place on July 15. This conference brings together influential decision makers from Europe and the US to prepare your company for the post-COVID-19 era. There's obviously a lot of uncertainty right now, and this event could perhaps provide you some guidance. Which different scenarios does your organization need to prepare for? And how do you ensure to have the best talented finance teams in place to tackle strategies, change the organization, and adapt your tech? Only one thing is for sure: organizations, as well as accounting and finance professionals, need to change. Another conference taking place as of next Tuesday is organized by the IMA Moscow chapter, an event for 2.5 days on June 23rd and 24th. This event focuses on how industry experts navigate coronavirus, financial and operational challenges while rapidly addressing the needs of people, customers, and suppliers. Attendees will learn industry specifics, real tools, initiatives, and practical steps to mitigate the consequences of COVID-19. And I can see that most of the European chapter leaders have joined today's conference, so we thank you all for your efforts and support and being an advocate for IMA.
And if you are interested in volunteering for a position at a local chapter, or perhaps starting a chapter in your own region, please get in touch with Alan or myself, and we would be pleased to facilitate. Now, if you're not yet a member of IMA, then we highly encourage you to join IMA. Simply register using the promo code on the screen, VMAC40, that's VMAC40, to take advantage of the discount exclusive for those who joined this event. Don't sign up right now because it's about to get a whole lot more interesting, but hopefully we've convinced you by the time we wrap up the event. And as Alan mentioned earlier, we support our members with a plethora of continuous learning opportunities and valuable education resources. We believe that committing to being a learning individual or a learning organization and education is part of our social responsibility. We have some brand new resources for finance and accounting professionals launched recently. The new IMA Data Analytics and Visualization Fundamental Certificate provides foundational knowledge and tools which are critical to finance professionals and will better equip them in an environment where technology continues to disrupt and transform entire industries. We also have the next one. If that sounds too basic, then you should go for the new course, Beyond the Basics, Data Analytics and Visualization for Accounting Professionals, which offers a leading edge data analytics training to upskill today's accounting leaders. Blockchain 101 is another new course. That one is unique because it is based on a gamified learning experience. Feel free to check out IMA Excel 365 with 10-minute nano courses provided by renowned author and Excel expert Bill Jelen, who is also called Mr. Excel. Or our Count Me It podcast for the latest perspectives and insights on management accounting as told by industry experts in only 10 to 20 minutes. So, you can also look into some of our new webinars on demand with topics on strategic management, leadership, and technology. And on top of all that, IMA offers some helpful resources to help CMA candidates prepare to take the CMA exam free of charge. Simply go to www.imanet.org to view our course catalog to get started. I have the pleasure of introducing Hessel Brouwer as the president of the IMA Switzerland chapter. Hessel has been a true advocate of IMA in Switzerland and has always driven awareness for continuous professional education among IMA members and the greater finance and accounting community, especially with events such as today's. And Hessel also serves on the IMA Europe board, and as a excuse me, as a CMA and CACA, he definitely knows his stuff. I would also like to introduce another highly motivated young professional who has played a significant role in organizing this and other IMA Switzerland chapter events, Marco Otti. Marco has managed to contribute at various levels as a volunteer leader for IMA, being part of a couple of committees and spearheading opportunities for IMA members to connect, even beyond Switzerland and Europe. So without further ado, I would like to virtually hand it over to Marco and Hessel. Enjoy the rest of the conference and see you soon.
Great, thank you for the introduction, Bernardine. Hello and welcome from my side to our first virtual management accounting conference. Before we move to the elevator pitches, I would like to say a few words about the IMA Switzerland chapter. Our chapter has around 250 plus members, currently at 275, which makes us the third largest IMA chapter in Europe. I would say that we are quite a diverse group of professional and student members and also very international. So this is why we have been focusing most of our activities in Geneva and Zurich area. Last year, we celebrated our 10-year anniversary of the chapter together with 100 years of IMA. Our president, Hessel, is actually one of the founding members. Also, Christian Cusick, who you can see here in the picture, IMA's current chair, served as president before. We were very happy to have Christian attend our conference last October at Johnson & Johnson in Zug, where he discussed opportunities for accounting and finance professionals in the digital age. Like I said, you can see here a picture of the event. As a chapter, our mission is to help new members and students pass the CMA certification, organize professional education events like today's conference, and connect at networking events, which we will do virtually today. So I'm very much looking forward to that. If you'd like to learn more about how you can get involved and also want to get to know our other board members, feel free to visit our chapter website. With that, I give the word to Hessel.
So hello everyone, and thanks very much for joining as well. This is the part of the conference where usually you would be coming into a physical space, drink a cup of coffee, catch up with some of your old friends and colleagues, and maybe meet a few friends and colleagues as well. This is a virtual conference, but the goal is absolutely to bring people together. And that is why we have the idea now to give people the chance to do an elevator pitch. Elevator pitch, you may be very well aware. Imagine you come to your office, which is a skyscraper, let's say in Manhattan. You wait for the lift, and you meet your CEO there, and you have about 2 minutes until you reach the 50th floor. And in these 2 minutes, you have the chance to pitch your wonderful idea. So we're going to give a couple of people the chance to do exactly that. They have volunteered in advance to share some ideas. The first person who's going to give her elevator pitch is Purnima Mishra. She is a long-term Swiss chapter board member, critical to the success of our chapter in Geneva. She is extremely dedicated both towards IMA as well to her full-time occupation with the Global Fund, and I'm very happy to give the floor to Purnima.
Thank you, Hessel. A very good afternoon, good evening to all the participants of MAC. Thank you for the opportunity of giving this pitch. In terms of the feelings that I have to share is usually very precious and personal, having been a board member for 3 years on the Swiss chapter now. I wanted to take this opportunity to thank IMA Global for their increasingly strong support. Their strategic investments in membership services, business development, and visibility have significantly augmented our outreach and service delivery as a chapter. We have experienced a high success rate in approaching local subject matter experts upon citation of our global presence, very meaningful and visible international standing, and a very high quality of communication material that is currently streaming all across our professional network. IMA Switzerland in particular has the pleasure of sharing a recent success story in onboarding 3 new board members who were deeply motivated after meeting IMA President Jeff Thompson at an event in Zurich last year. As a non-US chapter, we believe we benefit from a very high rate of return on all these investments by IMA Global than the residents' American chapters. In addition to Global, I would also take this opportunity to thank IMA Europe, particularly because of their prompt deployment of professional support in event management and community engagement. Something like this one today gives us the precious delivery bandwidth. It's an optimum use of the chapter board members' time and efforts, where we are then able to focus our energy on substantive matters and bring immediate value addition to our membership community. In the spirit of continuous improvement, if we have members from other countries joining this online MAC today, I would like to welcome a regular engagement platform wherein the board members from other countries are able to share knowledge, best practices, and even capacities wherever possible. With this, I would like to hand it over to Hessel, wishing you all an excellent conference ahead. Thank you. Over to you, Hessel.
Thank you very much, Purnima, and thanks indeed I think your words are absolutely echoed by myself and all the rest of the Swiss chapter board. What I didn't mention just now is, so this is an elevator pitch, so there's no time for a Q&A, but do feel free to engage via the chat, or of course connect with the speakers on LinkedIn or through another way. Do engage in the conversation. The next person volunteered out of Germany, so very nice to have international pitches as well today. Elnur Talibov. I hope I pronounced that correctly. He's a sales controller at BMW, and he is going to speak about some of the work he's been doing at BMW. Elnur, you can unmute yourself and go ahead.
Hello, Hessel. You see me?
Yes, perfectly.
Yeah, great. Just wanted to be sure that everything, the technique is functioning. All right. So my name is Elnur, and I'm currently living in Munich and working at BMW. First, I came to Germany when I was 19 years old, and I was doing my scholarship program at a university in Bochum. Then a year later, I went back to my home country, to Baku, and finished my undergraduate program. Then I was able to work at the German embassy in Azerbaijan for a year and a half, which helped me to not to forget my German language. Then in 2010, I decided to join my graduate program at Technical University in Munich. And during my studies in Munich, I did a couple of internships, both in at BMW and also in Siemens. I was also able to graduate international internship program from BMW in New Jersey. It was a nice time in New York, and I was able also to connect some US people which had different experiences in various subjects. And currently, when I joined to IMA, I recently decided also to do my CMA degree. And now I'm a CMA candidate. And when I heard about RPA during my learning program, I realized that I did already an RPA in my department, BMW, already last year. And we were one of the first departments who could implement RPA, and also to digitalize most of workforces who could save us much more time during our daily business. Please, if you are interested, I would be happy to share my experience in RPA. Just join me LinkedIn, and yeah, I would happy to tell you more. Thanks a lot for this opportunity, and wish you good luck.
Thanks very much, Elnur, for sharing this very nice personal story. I would definitely like to hear more about the RPA project you did. And I'm not sure if Nico Kaden is on right now. He's the president of the German chapter, and maybe we can connect you two and see if you could speak at an event in Munich, for example. So let's make sure we make those connections here today as well. Okay. The next speaker is Thijs Wijnands, a fellow Dutchman and also leader of the Swiss chapter. He's been many years engaged in the Geneva area as well, driving a lot of the initiatives there. He's also very active with PMI, the Project Management Institute, and he brings a lot of ideas and also experience to the Swiss chapter. Unfortunately, he is stepping down from the board this year, but we're very happy to have him on and sharing his experience with us. Thijs, I see you are in a nice place.
Thank you very much, Hessel, and hello and welcome everyone to this conference. Thank you very much for all the previous speakers. My name is Thijs Wijnands. Indeed, I'm not in an elevator in a skyscraper in Manhattan, but I will nevertheless try to keep it to 2 minutes. What I would like to talk to you about is the membership in non-for-profit professional organizations and how it can be of benefit to you. I've been working for a while now for a number of professional organizations. IMA is one of them. I also worked for the Project Management Institute. I have now become an active member of the Institute for Internal Auditors as I changed job and became an auditor, but I was also a member of IFASI, which is the French equivalent. But what I wanted to say to you and what I wanted to share with you is with all these organizations, I always started off as a member, an active member, and then on a couple of these organizations, I started to join the board or be very much more involved. And it has always been a great experience. For the last couple of years, I've been working with Bernardine, with Hessel, with Marco and Purnima on the board, and it's always been a really opportunity, I would say, an opportunity to be seized. Obviously, you can be a member of a professional organization, benefit from everything which there is, and IMA is an excellent organization, and I must say, also all the material that has been provided, as Purnima said, during the COVID lockdown phase, it was absolutely great. We had lots of opportunities, but it is an opportunity to look under the bonnet. If you start to become a volunteer, you can see how this organization works. And you can also contribute, you can help to shape it. Another opportunity, if you want to go further and invest more of your time, you can become a board member. And a board member is something which is actually in any time of your career a very good experience. At the start of your career, perhaps you don't have so much experience with governance and international collaborations. In the board, you will have a safe place to learn this. You can make mistakes. Hopefully, they're not that many and not that bad, but you will learn a lot, and it will help you to progress in your professional career and also in your private life. The thing is, obviously, is the level of engagement, and there I would like to warn you as well. Perhaps if you start, you always have to strike a balance between three things. One is your family, one is your work, and one is your work, everything you invest in your volunteering. And as you will see, as you start off, there is a certain balance, and as time goes on, this balance starts to change. You say, okay, why do I spend my time on this rather than on this? All I want to say is that there is a time to come and there is a time to leave. And I would strongly engage you to become an active member, to see what's going on. If you're interested, me and Hessel and Marco and Purnima, we can give you more information of all the opportunities that we have in the Switzerland chapter. And I really would encourage you to look into this opportunity if you're an IMA member at the moment. Thank you very much for your attention. I hope you will enjoy the conference. And if there is an opportunity, there's also a breakout session. So perhaps there's some more opportunities to talk. Thank you very much for your attention.
Thanks very much, Thijs, and thank you for this presentation. People who have seen me speak know that I'm often on my soapbox advocating for volunteerism, so it's really nice to hear this from your perspective, especially because you're active in so many different associations. So thank you very much. And talking about active members, last year I met Brad Perry at our conference in Geneva. At that time, we were talking about whether the CMA would be useful for a senior executive. In the meanwhile, he passed the CMA exam and he took a CFO position at Becom, a fast-growing international Swiss software company. And I'm very nice to see you again, Brad, and give the floor to you.
Thank you, Hessel. Hello, everyone. So yeah, I'm quite different than the other folks on the panel today in that I'm very new to IMA and everything that IMA does. So I came in contact with IMA, with Hessel and Bernardine and the team for social reasons. I wanted to build my network around Switzerland because I'm international and I didn't have a very close network here. But once I found out more about it, I found that there was actually a big advantage that I could take from IMA in a number of ways, but that had to do with the new position that I was taking. So I'm the CFO of Becom, BEQOM. It's a HR software company. It manages compensation for large companies. And I took that job after I got in contact with IMA, and I really wanted to move into a position where I was the CFO of the company. And my previous work, my previous career was very diverse. It was very international. I've lived all around the world. I've worked in corporate headquarters. I've worked in field offices. I've worked in different divisions, always around IT, but always around business support. So I was in business finance. But being a CFO, I needed a bit of a broader skill set than I had been able to get experience in my whole career. And I thought the CMA would give me a good grounding to do that, some of the more technical aspects of management accounting. So I quickly passed the exam and I got this job. And I can tell you it actually helped. A lot of the things that I studied, I put to use immediately. Cash, capital management, a lot of the things around reporting and local versus global management reporting. So it was great, the timing for me. I think it's a great organization and I'm starting to become more active as I get more time. But I think having done a lot of things in my career, having worked in and out of finance, in and out of accounting, I think going into a CFO role, it is important that you have a solid foundation to rely on. And that's what I got out of this organization. And I'm very appreciative for that. So it's very nice to meet all of you. I look forward to the rest of the conversation.
So Brad, thanks very much for sharing your story and also the great feedback you give regarding our organization. And yeah, I know that you're an extremely busy man, but we're always very happy to have even the slightest amount of time from our volunteers, like a 2-minute pitch. That's really amazing. So the last pitch, this one does not require an introduction. We all have seen Marco's introduction. I can just say that it's really wonderful and energizing to work with such an engaged volunteer like Marco. And with that, Marco, the floor is yours.
Thanks so much, Hessel. I also would like to show a little bit how volunteering with IMA can add value to your career. And I figured the best way to do is also to share a little bit of my story so far. So as Punima mentioned before, the first chapter event I attended was when Jeff Thompson, our president and CEO, came to Zurich to speak about the future trends, risks, issues, and potential for management accountants. While there, I also got to talk to a lot of like-minded professionals, which then prompted me to get involved in and volunteer. So some months later, I was asked then by Hessel to serve on the Swiss board, and my immediate instinct was to say yes. So I started to become more active. Moreover, I have also experienced the benefits from volunteering on a global and local level. For example, I find it very useful to read and review articles for Strategic Finance magazine. You learn from IMA members how they think our profession will be transformed. This work has then helped me to lead a discussion on data analytics and blockchain technology during one of our local events. I think this example shows how we can share our knowledge within the IMA community. Also, I had the opportunity to be part of last year's Young Professional Leadership Experience in Amsterdam. While participating in 2 panel discussions, I was happy to provide a European perspective to the global board and committees, where I talked about IMA membership and the career challenges for young professionals. So I think being part of a committee is actually a great way to bring the voices of the members to IMA. You can apply for one that interests you every year and help to shape the future of our organization. Finally, you get to meet people who are really passionate about accounting and finance, and by volunteering you gain valuable leadership experience, as has been mentioned before as well, while having a positive impact on others. So based on my story so far, I would say it's very much about leading and serving at the same time. So I hope this gives you some ideas on how you can get more involved with IMA, and maybe we see each other soon on a committee. So thank you, and back to you, Hessel.
Thank you, Marco. And it feels a bit like this was set up to talk only about volunteerism, but this is what people wanted to talk about, and I think that is a very nice way to actually start this conference. We are at the top of the hour, and we are in Switzerland, so we will start the conference very promptly. Just need to control the slides. Yes, very good. So a very warm, now official welcome to our virtual management accounting conference. So usually this would be our face-to-face meeting in Zurich, and I'm not going to mention the C word, as you all understand why we are here today. I'm very happy that so many of you could make it, and some people are still trickling in at this moment, and that you made it virtually to Switzerland today. Marco and I, we will be your hosts today. Yep, well, there you go. And we will guide you through today's sessions with both introducing our speakers and also handling some of the Q&A during these interactive sessions. We started preparing this conference already last year. Marco and I were actually preparing an article for strategic finance that we're still working quite hard on. We're full of ideas and very enthusiastic about the topics. And we're also fine with the date we selected. All we had to do is basically move a physical conference online. Now, Marco, he will go through the agenda with you and also tell you a couple of tips around the housekeeping for today. Marco?
Yeah, thanks, Hessel. Like you mentioned, we really enjoyed putting together the agenda for today's virtual conference. The main topics are ethics, innovative budgeting approaches, and the evolution of Industry 4.0. As you can see, we have exciting speakers lined up, including Dr. Elko Fiole from HEC Lausanne, Professor Dr. Klaus Müller from the University of St. Gallen, and Dr. Paul Chures, IMA's chair-elect. All the speakers will be introduced in more detail throughout the event. We hope you will gain many new insights from them. Please make sure to stay until the end of the conference to switch to the breakout rooms and for the virtual networking. Also, we are a very international group today, as has been mentioned already before. Participants are joining us not only from Switzerland, but other European countries like the Netherlands, Germany, France, United Kingdom, Austria, Russia, and many more. And we also welcome IMA members from the Middle East, Asia, and the United States. As a participant, feel free to use the Q&A function to submit your questions and comments. We have planned some time for your questions, especially during the professional ethics session and the panel discussion with CFOs and academics. In addition, you will be asked some polling questions about your views as well. Before we get started, I want to say a big thank you to everyone who makes today's event possible, especially Bernardine and Leanne from IMA. Thanks for all your support. With that, I would like to hand over to Hessel for his opening remarks. Hessel.
Yeah, thank you very much, Marco, indeed. And the goal of the conference today is to bring people together and provide you with new insights. You'll be able to earn CPE credits, but hopefully that's not the only reason why you're here. I just want to recommend to you, if you like to get most out of the session, engage in active listening. That means closing your email, especially closing down your Excel sheets, switch off your phone, and try to relate the topics that are discussed to your daily business. And best of all, actively engage in discussion in the chat. And I'm actually quite encouraged that there's a lot of comments already going through the chat. And to get the discussion going, I just want to do a little exercise with everyone. Just tell me where you are. And that could be anything, which country you are, which city, Are you in an office? Are you in your kitchen? Maybe you're on the beach. I would actually love to hear that one. Just tell me where you are. As you can see, I am in the Swiss mountains. It's a little bit chilly out here, but the sun is shining, so I'm comfortable. So just write where you are in the chat, and as we have almost 200 participants, we get a lot. I see a lot of people in Amsterdam, Rhode Island. Well, good morning. Good morning in America. Thanks for joining so early. Geneva, Zurich, Frankfurt, Heemstede, the Netherlands. This is a wonderful town. Okay, wonderful, wonderful. Well, I'm not going to keep it longer, but keep on writing there. We have a really wonderful mix of international guests today. So I do want to talk a little bit about the role of management accountants. These are particularly challenging times. These are also times where we as finance professionals can actually shine and show what we're really worth. Even before the crisis, we are swamped with information, statements, opinions, and as finance people, we've always had the task of bringing transparency. But that no longer means just bringing accounting information or just churning out management reports. It means qualifying the information from all the different sources and distilling what is really relevant. More than ever, we need to be clear and tough, because these are really not times to beat around the bush. The crisis has shown more clearly than ever that a perfect plan or perfect forecast does not exist. Those of us who can work with scenarios and think in options will be able to create most value for our organizations. We'll talk a lot about planning, budgeting later today, and we will probably, as Swiss chapter, also have an event on real options later. There will be even more pressure to be efficient going forward, and the CFO is driving many of those initiatives. So why not start in your own house first? So for example, by driving RPA projects like Elnur mentioned before. Those who have already started will have an advantage now. We need to be forward-looking, scouting for the newest technologies and the best practices. IMA members and Swiss chapter members know that we are always looking for the latest insights. And we're really happy to have Paul Jurz today as a keynote speaker, who will share a lot about the latest trends. Last but not least, we need to be the northern star of ethics for our organization, balancing the financial with the moral considerations. And that is really the segue to our first session of today. It's my pleasure to introduce Dr. Ilko Fiole. He's a certified management accountant and a chartered director. He is co-founder and managing partner of Alpha Governance Partners with partners across Europe, North America, and Asia. Alpha Governance Partners provides risk-focused and conflict-free professional directors to investment companies globally. Ilko is also adjunct professor of finance ethics at the universities of Neuchâtel and Lausanne. He has almost 10 years of COO and CFO experience in banking and investments, including overlooking assets in complex strategies of total $17 billion US. As a fellow Dutchman, Ilko graduated from in various academic domains, holding a PhD in economics from the University of Basel and various professional designations. Ilko, warm welcome.
Can you see and hear me?
Yes, I can and see and hear you. Yep, there we go.
Excellent.
Ilko, we are going to have a live interview session with questions that I prepared for you. At the end of the session, or probably halfway, we're also going to take questions from the audience. So please, for everyone in the audience, please do write your questions in the Q&A box, and we'll definitely handle some of them. And with that, Ilko, let's give it a start.
Thank you. I was thinking about this slide already, that too many designations, but maybe we can move on to do we have something else or?
Well, we actually have one polling question prepared. Yeah, this is our fireside chat. So imagine we are in a lounge having a coffee or tea.
Yeah, excellent. Can we have the polling question?
Absolutely.
So this is a question that I would like to put to you, to the audience. Do you feel that you are ethical? This is not necessarily meant to then, let's say, discuss between us, but I'd just like to understand a bit how we feel about ourselves in ethical situations. So the audience, can you please put your vote in? Disregard for that moment the word always. Always and never, these are always, you know, difficult words.
Okay, so we'll just give people a couple of seconds. There we have a lot of responses already. Okay, there you go.
That's fantastic. So we have 126, we have 184 people online, but I guess this is sort of the what we see. Of course, we always feel that we behave ethical, and you know, the sources of that are clear. I mean, we come in with a certain ethics into situations. Typically ethics which has been given to us by our schooling, by our parents, by our communities that we are active in. And still, even if we are very ethical professionals, in this case almost 80-20, we are seeing scandals on an everyday basis in the news, right? I'm not certain what the scandal of today is in your region of the world, but when you open the newspaper, there will be one. So how is that possible, right? That overall we are behaving quite ethically, but at the same time, is it really so that only 16% of people, if we see ourselves as representative of a managerial class, is apparently in the driving seats of ethical scandals? That can almost not be the case, right? So, so I'm going to talk a little bit about this in this Q&A session, Hessel, that you have prepared. Would you like to start off?
Yeah, absolutely, absolutely. So thanks everyone for voting. Not everyone voted, so just make sure that you are engaged with the conversation as well. We have a lot of opportunity for interaction during the day. So back to our lounge. So Ilko, when we talk about ethics, this sometimes feels a bit let's say soft or wishy-washy. How esoteric is ethics? And what can we actually learn from ethical considerations?
Well, ethics is a difficult topic in daily life, in professional life, but actually ethics is not esoteric at all. Ethics is the notion of the right thought and the right act. So I'm going to be a little bit theoretical first, but I think quickly we'll see the application in daily life, especially in our financial lives ahead of us. Okay, so I said the right thought and the right act in at any point in time when we are faced with a decision, and we're always faced with decisions on a daily basis. If I think about ethics, there are different ethics can be seen as constructs, right? As theories, if you will, with a certain logic to it. And knowing these constructs will allow us to analyze any decision better and to sort of avoid ethical pitfalls and risks. I'd like to introduce 3 schools of thought that can help us in making ethical decisions. One school of thought is called utilitarianism, and basically the key tenet, and I will not speak too much about the theory here, but the key tenet is that an action is moral when it increases so-called pleasure over pains, i.e. benefits over costs for humanity as a whole. So that means we're looking at the group and we're saying what is good for the group. Now, this is tricky, of course, because you know, the interest of an individual is subjugated, is subordinated to the interest of the group. An example of this in real life would be the tax system, right, where we redistribute monies from one side to the other side within society. The individual is not being asked if they agree with it or if they how much that they want to pay. It is a group activity. It's a difficult topic because what is humanity really, and how can you measure you know, benefits over costs? So there is a lot of judgment that has to come in. So when you're faced with a decision, you know, you can be faced with decisions in which the group interest has to prevail. And then I think one piece of awareness that we need to have is that it means that individuals will always suffer, and we'll come to that in a moment. The second school of thought that I would like to introduce is called deontology, not to be confused with dentistry. You know, it would be fantastic to put you a business card, I'm a deontologist, because nobody necessarily knows what that means. It is basically the notion that an act is moral, is ethical, if it can be seen as universal law. And that means that, you know, you should ask yourself, if I make this decision or if I do this action, is this something that I would like to see valid, let's say, all over? And this would be something that everybody should decide on, and this is something that I can repeat, etc. And the more of those kind of actions and decisions we take, which do carry that feature, the more laws, if you will, we're going to get, and you're going to get this system in which society works and society becomes ethical. In that sense, acts are required, things that we need to do, or forbidden that we cannot do, or are allowed. They can be done, don't necessarily have to be done. So here the unit of analysis is the individual act, and for the individual person, let's say, as opposed to the group which is affected. So this act, this law, this act which has to comply with this law, if you will, that is what we call is reasonable. And you know, so we have this reasonability in our society as a result. The third school of thought that I like to introduce is called virtue ethics, very different line of thinking. And basically, virtue ethics departs from the notion that ethical questions are difficult, they are messy, and there are no precise answers that we can expect. So you have to settle on something, and that something is not clear from the outstart. It's you know, so acting morally in that sense, in that notion, requires what we call practical wisdom, judgment and experience with ethical dilemmas. So this means thinking and acting. Now, for this to sort of come about, for this wisdom to develop, and for this judgment to develop, we need to develop our character traits, i.e. our virtues, hence the name virtue ethics. So we need to develop our virtues through reflection and contemplation, and then we need to act on them. So what are virtues? This could be things like courage, fairness, prudence, temperance, and so on. And you know, when we practice these virtues already from young age, i.e., you know, we need to be taught these virtues, of course, as well by our parents and by schooling, then we also gain experience with these virtues, and then we can also apply them in complex settings. You know, if we don't have enough virtues, we see that in the newspaper every day. If we have too much virtues, then it also doesn't work. If we have too much courage, for example, we can drown ourselves trying to save a dog. If we don't have enough courage, for example, then obviously we will not even get into the water, unfortunately, even though there could be a chance of saving the dog. So there's you know, but that's again a topic where judgment is coming in. Okay, so in virtues, we need to ask ourselves, what does justice require us to do? So in short, if you look at these three schools of thought, there are different ways of thinking about it, and also different structures, let's say, that you have to understand that these things are there, that we don't mix these things up. We need to understand first what the decision or the act at hand is. We need to understand the interest, and I will talk about interest at stake later on. You need to be aware of the logic, you know, the logic that is sort of offered, that is, you know, that is sort of required from us, let's say, and then we can choose our line of thinking, weigh the options and decide. I will say this: there's not one sense of ethics which always prevails in every situation. It is not an exact science. So in short, there's lots to learn from moral philosophy, and it is very, very hands-on if we go through the material.
It's very interesting. And how can CFOs practically operate ethically?
Well, yeah, so in the rest of this conversation, I will have the CFO or a finance director in mind. You know, that could be at any level of the organization. First of all, I think we need to understand what is the ethical responsibility of a CFO. So as a CFO of an organization, that organization operates with what we call nowadays, or not only nowadays, but also before, in a social contract, i.e. The organization is supposed to interact with society and answer to a number of stakeholders. So if you are a CFO or in any leadership position per se, we have the authority and also the possibility to shape, let's say, standards, including moral standards. And as a result, we also have the responsibility to do so. The CFO's responsibility is to act on behalf of the firm and the interest of its stakeholders. This is called a fiduciary duty. So the ethical responsibility is to live up to the fiduciary duty that the CFO has by mere virtue of being in the seat. The fiduciary duty is a special duty. It's a moral duty, and it's also in some jurisdictions a legal duty. The fiduciary duty is special and is one of a higher calling. It's rather encompassing because you cannot describe it in a list of tasks, like this is your task list and this is what you need to do. In technical terms, there's a lot of judgment coming in. It arises as the CFO has some level of discretionary power over the interests that are at stake. And the person is obligated by the job to use that power. Of course, as a CFO, you have to make decisions. It's part of your package, and the power is in your hands. Now, any party which is affected, or any direct or indirect stakeholder, cannot meaningfully oversee the work of the CFO. As a result, all of those people, be it shareholders or be it other stakeholders, they are, you know, at the mercy of the CFO in this particular case. They are vulnerable, and they need, any stakeholder, direct or indirect, need to trust this person with that power which is vested in that job. And mind you, this is typically a complete stranger. If I invest in a company and the CFO sort of makes financial decisions, I typically do not know this person, and I just would have to trust that this person is taking his fiduciary duties serious. So we talked about the trust. I cannot do this task myself as an investor, so I need to trust the CFO. This trust cannot be captured in a law, in contract law or in labor law, other than calling it trust, which of course doesn't prescribe all behaviors in all situations. So as a result, this is a duty which is rooted in good faith and in loyalty, and it is a rather strict duty. So as a result, we can say that fiduciaries, they serve a huge societal interests. I will come a little bit later to be a little bit more detailed about how a CFO really operates ethically. But I think I need to speak a little bit more about that fiduciary duty, unless you have do you have a question on that?
Well, it seems very, let's say, it's not particularly precise, like you say, right? It's not written in laws. It's about loyalties. It's about values. So I'm very interested how you can actually apply that. Yeah.
Well, fiduciary duties are a well-known component of law in the Commonwealth jurisdictions, which we don't have in Europe and which we don't have in the parts of the Middle East or Asia and so on. However, you know, the notion of fiduciary duty is known, of course, around the world, around stewardship and what have you. In fact, I recently looked into the principles of Islamic finance, and there are very noble principles underlying that as well. Now, as I say, in common law jurisdictions, you will find this fiduciary duty, and they typically center around a couple of duties that I'd like to highlight. Which are sort of leading, if you will, in our thinking around these activities. One would be a duty of care, and the duty of care talks about how you, as a finance director, do your work. As a, you need to be a professional. You need to know your game. You need to be on top of things. You need to know what you can, and you need to know what you cannot, i.e. What are your strengths and what are sort of your weaknesses, and be honest about it, so that you can be very careful in performing your work. The second element of fiduciary duty would be the duty of loyalty. The duty of loyalty to these kind of stakeholders, shareholders and others. Which means that you need to be responsible, you need to be diligent, and you need to work to the benefit of stakeholders. And there can be, of course, competing loyalties, which I may come back to. A third element would be the duty of impartiality. And the duty of impartiality means that people expect to be treated fairly. And fairness is a relative concept. Something is fair compared to, you being treated fairly compared to treatment of somebody else. And if we don't feel treated fairly, then we get a feeling of outrage, if you will, a feeling of injustice. And that's when we're going to ask questions. Now, in all of this, we are all humans, and finance directors are not different. So an amount of reasonable business judgment is allowed, of course. I mean, there's no absolutism in this. We're all trying to be reasonable and to pass reasonable judgment. A last element is the duty of candor, where we basically require people to be honest and to tell the truth. That has to do with representation, as you can see also in accounting standards and others, and reporting. So these are sort of the four duties. Now we can think of other duties as well, more conceptually, however, I think that the key element there is that there is a duty, if you think about the fiduciary duty of putting the interest of the stakeholders before your own, i.e. the firm and stakeholders, then we sort of have a duty to adapt, to adapt to every situation that we get into, right? So if you are a finance director, you can't just take the list and say, okay, yeah, I've handled these duties, and as a result, I'm fine. We need to adapt. Now, in reality, if you go through these duties, you can actually think about how how a meeting or how a decision would be shaped. To fulfill these duties, we need to sort of answer a couple of questions. Some questions could include things like, do we understand the benefits and risks of certain decisions? And this goes pretty far, because if it means understand, it means that we understand, the ins and outs. We understand who is affected. Do we understand what interests are at stake? How do we weigh the interests? If any harm is done, how does it get compensated and communicated? And so on. So a second one would be, is there an alternative to a course of action? Is it clear that this is the only course of action that we are planning or that we can envisage, or not? And are all questions answered before we can proceed? And an answer doesn't need to be a definitive answer. We can realize that there is uncertainty and embrace that uncertainty and decide anyway. Many times we have to. The third question would be, what kind of conflicts of interest are we facing actually or potentially? And how does it impact perception of this decision that we're about to make? Conflicts of interest, we may speak about it in a little bit more detail, but they are looming everywhere, out of the incentive system that we have as company executives, out of the range of services that we offer. Very often we feel that one-stop shopping is great. We have more services under one roof. We can offer the client everything. However, the more we offer under one roof, the more potential for conflict of interest comes in. And hence, we need to sort of face that with compliance and compliance systems and processes and manuals and so on to sort of solve for that. So we need to understand the potential and actual conflicts of interest. Of course, when you make a decision, you need to have an active feeling that you do this in the best interest. So it's clear that you weighed all the stakes and come to the conclusion that it is the best interest. Now, and I say feeling, it sounds indeed a bit wishy-washy, but it does mean having to go systematically through all of these stakeholders and weigh the various elements of that. It is not an exact science. We need to understand if a decision favors, in that respect, one group over another, right? And so fulfilling this duty, this fiduciary duty, we need to go through this classification, understand our thinking, and go through the motions, basically. So that is what would, and then we adapt to the situation, as we always need to do, because as you know, the higher up you're in the hierarchy, the more, the less certain, the more vague things become, and the more judgment comes in, and the more important these kind of structural approaches to decisions come in. So does that answer your question a bit? Or?
Yeah, absolutely, absolutely. And I think it's very interesting that basically the duties you describe, they are very much aligned with also what IMA's ethics framework is. So actually, it's very, very relatable, and yeah. I guess it's kind of a standard in the theory. I just want to remind people that they can submit questions. We have now a couple of questions coming in. Before we go to the questions of the audience, I really like this comment about conflict of interest, or let's say I would like to learn more about that. And after that, I will go into some of the questions that are being submitted right now.
Well, the conflicts of interest, what we see is that, as I mentioned, I made a distinction between actual and potential conflicts of interest, which create a lot of anxiety because people shy away from things because they think there is a potential conflict of interest without much analysis. And that's a shame because sometimes they are not really conflicts of interest. We look at conflicts of interest also in terms of conflicts which yield personal gain or impersonal gain, i.e. Gain for the organization if a conflict sort of gets ignored, but not necessarily is it coming back in terms of promotions or bonus, or individual conflicts of interest versus organizational conflicts of interest, where individually you're just doing your work, but organizationally it leads to conflicts of interest. So that means that supervisors always need to look at like, how do we organize ourselves? Can we avoid, mitigate, or solve for conflicts of interest? So I'd like to close off for this moment with, how is it if but this was a huge amount of material, to be honest, if I would go into depth. How is it, if we would operate ethically as CFOs? So we need to, act in line with our fiduciary duties. We need to recognize moral content. And the first feeling is that you can think about is that if I take this decision, who would be outraged or who would be not happy? We need to have a willingness to act on our values and on our insight around the moral content of the conflict. Understand what interest is at stake, who is affected, if we can justify any harm, how an issue would be framed, i.e. be presented. We need to check our intentions. What is it that we're trying to achieve? Not just focus on potential results. Think about the virtues and also think about the, is this a question that should have universal validity, or the answer to it, let's say the universal law. So in a nutshell, that would make you an ethical decision maker.
Yeah, very good. And the questions we're getting in are pretty practical. So I think it's nice we go into some, let's say, more practical questions so we can apply the theory. What do you think about that, Ilko?
Sure.
So the first question I get is from Larry White. I'm just going to read it out. It's a little bit long, but I think it's very relevant. So you're speaking primarily about CFO's duty to external shareholders and external legal requirements. What about the CFO's duty to internal stakeholders? What if external information is distorting for an internal decision? What if incentives set by the board of directors based on external financial reporting are creating a bad internal management decision? It's a long question, but I think
it's actually 3 questions.
Yeah.
So first of all, when I speak about the fiduciary duty, I do not speak about necessarily here the legal fiduciary duty, which in many jurisdictions focuses on increasing shareholder value, which, by the way, has many factors that flow into shareholder value, not just the P&L, as we know. So there are legal requirements, of course, that we need to stick within the law. However, the thing around ethics is that ethics leads to laws, i.e. if society feels that we need a different representation of interests of stakeholders, then lawmakers would be chosen, hopefully, who are in charge, would normally enter into the lawmaking process and make certain that these laws get enacted. Now, this is of course a very complex process, and it doesn't always happen and what have you, but it is laws which are the result of some shared feeling around morality within a society. There are many stakeholders, not indeed just shareholders or the legal counsel or the legal environment, but also, of course, employees and any other stakeholders that you can think of, clients, providers, suppliers, but also stakeholders, and I said who are affected. So for example, if I dump chemical waste in a river, then that come up, you know, illegally, of course, but if that chemical waste would show up in, you know, your garden, which is lying at the river, then you are affected, even though, and then you become a stakeholder, even though you had no direct relationship to the firm. So that's why I'm saying you need to go through the analysis of whose interests are at stake, and also who can be affected by any decision that that I'm taking. And as a result, we need to weigh these things up. Now, in terms of, there's this classic debate about shareholders, are they most important? If you look at the capital structure, you will see that shareholders are the last ones to be satisfied in their claims, right? So a company would need to pay its workers, it needs to pay tax, it needs to pay suppliers, it needs to pay and all kinds of, you know, other claimants. And only when there is something left, you know, then we can talk about dividends, which then goes to shareholders. So if I take, but I didn't talk about balance sheet capital structure, but in this case, P&L. So, so there's an argument to say that shareholders should be serviced, because by servicing the shareholders, other stakeholders, at least in the financial sense, are already served before the shareholders are being served. Now, the second question talks about external decisions which are being taken, which distort. That is, of course, the working of society. I mean, the board needs to navigate, need to represent the various interests, including, you know, whatever comes from external, and needs to, you know, navigate the firm, overlooking the firm, that the firm replies well to those kind of influences. Now, of course, there can be distortions, and it means that companies, as a result, may suffer. It's not just by the ethical decisions that CFOs take or boards take that they can survive. It is also, you know, the decisions, if you will, of others. Can it come to accidents? Absolutely. Maybe there's more to say about this, and I'm not certain if I went well into the question, but we can also take this later in the break. The third element on the incentives, that is absolutely key. So if we recruit people in senior positions, we recruit people based on, hopefully, experience and knowledge of matters, but oftentimes that's not even the case. But the third element is what I call evidenced integrity. So before we put people on you know, senior positions, we need also to understand evidenced integrity, and that we understand how does this person you know, deal with ethical dilemmas. Does this person have an ethical framework? Show me examples of this. How did you react? What was the situation, etc. And that oftentimes these kind of considerations, i.e. the evidence of integrity, is not being reflected in management practices, and also not in incentive structures. So you have incentive structures with bonuses, with participations, with all kinds of other things which do not take that into account. We need integrity in you know, in systems, i.e. right, in remediation, in design of incentive systems, in sanctions, and so on. And we can address each other on behaviors. We can say to each other, hey, that's not the behavior that we have, that we show. So that we sort of have a culture as well, which carries, you know, and it doesn't need to be dependent only on the incentive system. But it is absolutely clear that if the incentive system is only focused on achieving next quarter's financial results, then you run ethical risks.
Yeah, thanks very much. And I liked what you said earlier about the internal kind of ethical framework, and the order of let's say the stakeholders needs to be served. And I worked several years at Johnson & Johnson that has an internal document, the Credo, which is also publicly available, and it states very clearly that the patients comes first, then other stakeholders, and the shareholder last. So they basically formalized this 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 method as well. I think that the question from Mortas Kant has been answered. I hope so. Maybe you can just quickly write if that's if your question has been answered as well. And we get a lot of interesting questions in. Just kind of still attaching to this discussion. A question from Nikolai Melenchuk. How ethical is blind implementation of procedures? For example, there is an issue you feel unethical if you would be open to public, but your legal action does it make this ethical action ethical from a personal professional point of view? So basically, should you implement procedures blindly?
That's a good question. So the thing with procedures is that there is a concept called procedural fairness. And so we need to understand what the procedure is trying to achieve and the ethical analysis having gone into the design and of this procedure, so that we understand the procedural fairness. The procedural fairness is basically a fairness which says that the procedure is fair to all people affected, people involved. And as such, if we all feel that there is procedural fairness, it also means that you get more buy-in for for the end result. Now, if procedural fairness is not a given, then we also see that oftentimes that the substantial fairness, i.e. the result of the procedure, is not fair and it's also not accepted. And we see this, for example, in the incentive systems. So that is one thing. So the communication around the procedure is of course absolutely key, and the stage before the procedure, i.e. the intentions, what are we trying to achieve, have we considered all interests at stake, etc. This is absolutely key. And when that is a given, let's say when we all feel this is the case, then we can implement the procedure. Now the world is a complex place, and as such, this procedure may have validity for a certain amount of time, and then after some time you may want to check if the validity is still given and redesign potential procedures. So that is so blind implementation. The answer is sort of no. However, it means, of course, that other people that sort of are in charge as a finance director or others, need to indicate what it is that what was their thinking around this, and you do this to get, by getting all the stakeholders in place. And I know what I've from experience. I mean, I've been involved in allocation procedures, cost allocation, revenue allocation, trade allocation, and so on. So this is a real issue. And without those considerations, you run the risk, if you do blindly implement, you run the risk of unintended outcomes, which it's going to be negative.
All right, yeah, thank you for that. And I like a pretty practical question from Brad, who spoke earlier. So, do you have advice for companies being impacted during COVID-19? In particularly treating employees and partners with care while having to cut costs and make tough decisions?
Yeah, well, as you can see from my background, I'm also affected by COVID-19, and we all are. So I feel very passionate about acting with kindness and because we're all sort of in the same boat in this particular case. Now, the thing is that we cannot avoid out of COVID-19 certain negative consequences. Businesses which are no longer viable or not in the shape that they are. Now, an economist would say, this is just businesses going down, new businesses coming up, and I think that is something that we need to take to heart. Because it is going to be true that we're going to see job cuts, etc. So, and businesses not surviving this. So I think that what fairness requires, right? That was the question, like what does justice require? What does fairness require? Would be a weighing of all the interests at stake, and you know, a proper framing of what is going on, the presenting of the facts, and communicating of those. There will be little escaping there. Will it be hard on people? Yes, it will be hard on people. That is clear. So to the extent that we can help people, being, you know, having some level of solidarity, that is what we, I think, as people would want to do, because the reality is that these are forces which are bigger than ourselves, and as a result, it also means that whatever hits somebody else can also hit us. And so we need, this is one ethical golden rule, actually, you know, don't do to others what you would not want to be done on yourself as well. So to the extent that you are in the seat where you have to let people go, you want to do this with kindness. There's no escaping of tough decisions. I'm actually trying to help somebody myself with repositioning the business model for, you know, post COVID-19 as well, because it's clear that the old business model is not working going forward.
Indeed, indeed. And just maybe a follow-up question from Hao Zhang. Is there any evidence that family companies act more ethically than public companies? If you're in a position to answer that.
Well, I do not know what the academic evidence there is, but the interesting thing is that the private companies obviously have different governance structures than public listed companies, and are a little bit more flexible. So to the extent that privately owned companies, i.e. the owners of those companies, take that leeway in managing their companies, they have more leeway sort of to take care of people in this situation. Now, generally speaking, and I speak a little bit from experience, not so much from the academic background, private companies can potentially be less ethical because there's less, you know, there's less oversight, less independent oversight, and less representation of stakeholders than what you have in listed companies. It stands and falls, of course, with the people in charge.
All right, and another question that quite caught my interest is from Sovan Sahu. Do you have any advice in ethics of information transparency, especially while managing down? So, for example, we need to sign an NDA, non-disclosure agreement for sensitive information, and we're legally bound by that. But at the same time, sometimes keeping impacted people blind is not something we could be comfortable with. I guess it even goes almost to the direction of kind of whistleblower situations.
Yeah. So there's a couple of things in this. First of all, if I take the example of the NDA is of course written by, it's a legal document and it is not an ethical document. And so the way that this is written sort of complies with the legal environment in which this venture is operating. And it is also written from a certain perspective. It is certainly not written from you know, from the perspective of all the stakeholders. It's typically of the firm or any other, you know, a buying party or a selling party or whatever the NDA is supposed to cover. So that means that certainly not interests are being represented in the NDA. And if we sign we sign it, then we sort of bound by it. And as a result, you know, we are faced with this sensitivity around the information. Now, having said that, we also have to understand whose information it is, who is the legal owner or also the moral owner of certain information. And if information is out there, how would it affect different parties? So it is, you know, inside information, as we know, material non-public information, I should say, should stay inside, because that is owned by a firm and would have impact on a decision to buy or sell or hold, for example, a security. So we need to understand who has the right to have this information and trade on this information. So in that sense, you can apply a hierarchy to things. Not all the information that we have in a company necessarily need to be published. We need to make certain that all the interests are serviced well. And if that's not possible, then it is sort of better to not disclose it, even though disclosure is a key element, you know, of information management. But it only goes so far, and that's why it is so important to think about, you know, as I say, the interests at stake, the people affected, the harm being done, the rights at stake, the duties at stake of the, you know, versus the various stakeholders, and then the course of action to the best of your knowledge, right? To the, you know, there's judgment coming in, and it will be different from situation to situation as well.
Thanks very much, and that's definitely yeah, a difficult situation that many of us might face in our careers. I'm going to have the last question. This is actually a personal question that I still have, and I know that you have a lot of experience also in the blockchain space. What kind of new ethical challenges does blockchain bring for us?
Yeah, so I did see a question coming in from Stefano, which I cannot answer here now. It's about culture, very interesting. Take it to the break, Stefano, we'll talk about it. Blockchain. Well, the thing is that blockchain is a kind of an innovation, which I've called it a revolutionary promise. And I don't want necessarily want to go into blockchain itself and what it does. I mean, it does offer us technology to sort of embed trust and program trust, and as a result, we can transact, right? But it is an innovation for which the rules of proper conduct and safe practice are not set yet. Regulators are looking into it, can't make up their mind. There are incentives in blockchains. I mean, the whole token economy is something which is not well understood by the masses. And also the question is, if we use this technology, how does risk of using this technology shifts, right? And it shifts maybe from one party to another party, which we need to understand as well. It is difficult to perceive if something blows up, where it would blow up at the moment. And so we have dangers that we don't know yet. You know, it holds this whole blockchain, if it's a revolutionary promise, it also holds people captive, you know, to what it all can mean for us. It can mean quite a lot, and I'm a big proponent of it. This means that if you look at the different blockchain applications, not only talking about the core layers, the core protocol design, but also the applications being built upon it, we have to ask ourselves the question, how is the governance of that being designed? And is it just, if you talk about a proof of work protocol, for example, the miners that get to vote on things? Is it, you know, the people who develop applications who get to decide on things and how things are being done, who has voting rights and et cetera, or you know, how is governance being designed? And with all respect, you know, we have fantastic brains working on blockchain, technologists and computer scientists. Not necessarily are they also the experts in governance design. So this means that I see there a certain risk. Now, it's also in their interest to have governance design properly, because of course, the better the governance design is, and I'm not talking about a top-down governance, it can also be governance in the protocol itself or from users and developers. The better that is, the higher level of adoption you're going to get and trust that you're going to get from people that say, I don't mind having my securities or my reporting or whatever it is done through the blockchain because I trust what's going on over there, because I know that my interest is being represented well. And that is the core of the governance question there. And that's not highlighted enough in my mind yet.
Yeah, so a lot of work to do there, and actually another very interesting topic for discussion. We'll need to leave it there. Thanks very much for this very interesting and engaging conversation. Thanks everyone for asking the questions. So like you said, Ilko, we were not able to answer all of the questions. We will either do that during the breakout sessions, or we find another way to still answer those questions. Our next speaker up is Emma Fennelly from EMEA Recruitment. I know Emma already for several years. Emma and EMEA Recruitment are regular attendants of our events, both in Zurich and Geneva area. Their attendance is very much appreciated by our members, both because of the great insights in the Swiss job market they give, and also the opportunity to network personally. Emma is a senior consultant from EMEA Recruitment, covering both the German-speaking and French-speaking part of Switzerland. With that, Emma, the floor is yours.
Thank you, Hessel. Thank you for that introduction, and thank you again to IMA for continually inviting us to be part of your events, both Geneva, Zurich, and now, of course, virtually. So, yeah, hopefully we should have the slides up soon. So I am aware that we have around 15 minutes together today. So with that in mind, I am going to jump straight in. I'm not going to be able to go through everything in huge amounts of detail. So if you do have questions or anything like that, and you're in my breakout room later, do feel free to save them for then. Or I'm more than happy to connect with anyone on LinkedIn to have a further discussion after the event as well. Today, I am going to be talking to you about the value of your network, and that is going to be the main part of the presentation. I will also address the C word, as Hessel puts it, and talk a little bit first about COVID-19 and how that maybe has affected the market. So we will start with that first of all. As you can imagine, a question that I'm getting a lot at the moment from candidates, from clients is, how is the market? Is COVID affecting the market? The very short answer to that is yes, as I'm sure will not come as a surprise to any of you, no matter which country you're joining from today. There's quite a lot of studies that have been done already on this topic. Hopefully you'll be able to see from the screen this graph that I have taken from one done by Indeed, the job portal. They have actually been looking at the number of job postings they had this year in a set period versus the number of job postings they had in the same period as last year. And it is quite clear to see that across the board, although the impacts are different in different countries, that yes, there has been a decline. What I want to do today is not try and interpret this data. I feel that maybe we don't have time. It's a conversation that could go on all day, but I do encourage you to have a look and see what you can find out there, because some of the research is very interesting. What I do want to focus on a little bit more is actually how all of this translates to finance, and particularly the Swiss market where I'm working. So it is, again, not going to come to any surprise to you that certain industries are more affected than others. If we talk about the aviation, the travel industry, clearly, a couple of months ago, hiring there was frozen or delayed, and the focus turned more to survival. Some industries, although they have also, of course, faced challenges, maybe have had slightly less of an impact. So FMCG, food and beverages, perhaps online services, or some sort of pharmaceutical products. That being said, all businesses are still being very cautious in their approach. So the types of roles that we are seeing continuing are typically those that have been deemed to be business critical or urgently need filling in some way. Perhaps the roles that are newly created or coming around as part of growth are the ones that are being reconsidered, perhaps cancelled or delayed for later on in the year, or maybe even later. What has been really pleasantly surprising actually has been the adaptability of companies, even the more traditional ones perhaps that we work with, moving processes online, Zoom interviews, onboarding people remotely, and actually things are looking up. I think certainly in Switzerland, as the country starts to open, processes are beginning to move, and hiring is back on the agenda for at least some of our clients. So that's where I'm going to leave COVID. As I said, happy to pick up the conversation later, but for now I want to focus a little bit more on searching and applying for positions. So before you jump into applying for roles, I think there's a useful exercise that you can do with yourself, and that starts with these two questions on the screen. So where do you see yourself in 5 to 10 years? What is your career goal? You might just think that these are horrible questions designed to trip you up in an interview situation, but actually it's quite a useful self-reflection exercise that you can do to give yourself an idea maybe of where you want to end up, whether it is in 5 years or 10 years, and enable you to kind of work backwards and start to think, right, if this is where I want to be, what kind of position should I be looking for next? Maybe the position after that, maybe the position after that. Obviously, plans don't always go the way you intend, so this isn't a sort of set in stone thing. It's just to give yourself a bit of an idea of the direction that you might start to look in. Just as a very quick aside, one of the services that we offer is a career consultation. This is a very simplified version you see on the screen here. It usually takes around 40 minutes to go through, but if anyone, particularly from Switzerland and the Netherlands, our two core markets, wants to chat in more detail, would be happy to do so. So once you've decided that it's the time to start applying for roles and you've figured out the types of positions you want to go for, I am guessing, I would be willing to put money actually on the fact that most of us would head straight to LinkedIn to see what kind of jobs are open in our areas. LinkedIn is a great tool. I use it daily, hourly, actually, in my sort of everyday job, and I really do value it. However, I think when you're using it to apply for positions, there can be a few pitfalls that you will come across. And the one I want to talk about is the number of applicants that use the tool. So if you look at these screenshots here, you will see that the roles have had 300, 200, 190 applications. So before you sort of click that ever so tempting blue easy apply button, next time you want to go for a role, my suggestion would be to have a think about a few things before you do that, because all you're really doing is throwing your profile in there with potentially hundreds of other people and hoping for the best, hoping that it will get noticed. First of all, think about the company and think, do I know anyone? Do you have a connection that works at that company? If so, are they in the right function? Are they in finance themselves, or do they business partner with finance? Are they a senior person? Would they have the authority within the organization to be able to put your name forward? And actually, can they recommend you? Have they worked with you or studied with you before, know you personally, so they could confidently put your name forward? If the answers to these questions are yes, then great, utilize that connection. Even if they can't put you forward, they might be able to give you more information on the company culture, the hiring process, the line manager, whatever it is. If the answers to these questions are no, and you just genuinely don't know anybody, it could be time to enlist some help from your friend, the recruiter. They may already be mandated on the role and be able to include you in the shortlist, Or again, at the very least, they may be able to put you in touch with the right HR professional, the line manager, and give you some insight into the process. If you really have exhausted all of these options and you know there's no other way sort of around the hiring process, then of course apply directly to the company. You know, I think the best way is to look at the website of the company and go through the proper process that is set out there. If that's not possible and you really do have to apply via LinkedIn, at the very least ensure that you are uploading your full CV and not just sending across the basic profile. Believe me, as somebody who is often on the receiving end of these kinds of applications, it's very frustrating to have to go back and ask for more information before even being able to progress someone to the next stage. So that's just a couple of tips on positions that are advertised. But as anybody who is active on the Swiss market particularly will know, not all positions are advertised, especially perhaps at the senior level. You know, they might be sat either with a recruitment agency or with the in-house talent professionals of that company. So the next thing you need to start doing is considering that, you know, how to get your profile noticed and get your profile into the searches that these professionals are making. So this might seem like the most obvious thing in the world, but sometimes people are a little bit unsure. Make sure that you are clicking, that you are open to opportunities on your LinkedIn profile. You control who sees this, so don't worry, there's not going to be an awkward conversation with HR or your boss isn't going to find out. All this will do will make sure that you appear at the top of searches when recruiters or talent professionals are looking. Once you've done that, start thinking about your profile. The aim for your profile is to have an all-star profile, which means that all the fields are filled out and you've included as much detail as you possibly can and that it's up to date. Another thing to consider is your headline. If you're just putting something like searching for a new position, that might not be inspiring people to actually click into your profile. However, if you are putting something like finance manager with a focus on transformation, or you're putting your industry experience, or you're including your relevant qualifications, people may be a little bit more curious and more inclined to actually click and see, you know, a bit more what you're about. Connecting with the right people is key, whether these are recruitment or talent professionals, managers in your target companies, or influencers in your field. But you can't stop there. Then going on to engage with these people is the key, whether that is simply liking posts or articles that they might share, or actually entering into the debate by sharing your own opinions, your own viewpoints on specific topics. If you feel like you have something to say yourself, by all means, write an article, create a post, but do consider the time that you are posting. Maybe not everyone, like recruiters, spends all their time scrolling through LinkedIn, but lunchtime and evenings typically are the best times to post. Just a quick one on beating the algorithms as well. On the left, you see a plain text post, which has had 84 views in the feed. On the right, you see a video, which has had significantly more engagement, comments and views. So again, something else to consider, maybe including an image or a video if you really feel that you have something to say that you want to get noticed. And then the final point that I want to make today is around in-person networking. Now, I know that this is incredibly difficult to be doing at the moment, so you can be forgiven, of course, for not attending events in a global pandemic. But I really think that it's so important that you are doing the next best thing by attending an event like this one today, especially if you're going to be engaged in the breakout sessions later on. You never know when a connection that you meet at an event is going to come in useful. It might not happen immediately, but I have to say that even now, I have clients that I've met months, even years ago at events that have then come back to me after I fostered that relationship and given me business opportunities. So yeah, it pushes you out your comfort zone, but it is definitely worth it in the end. The final thought I want to leave you with today is hopefully a positive one. And you may have seen this kind of image before. It is the iceberg illusion. When you're searching for jobs, I think it's easy to see people who maybe jump from role to role very easily, and you think, how do they do this? What you maybe don't see is the amount of events they've attended, the amount of knockbacks they've had previously, the amount of rejections they've had from applications, until they've actually got to the point of getting a new job. So hopefully some words of encouragement. Yes, work hard. Yes, be dedicated, be persistent and expect some disappointment. But be patient. The Swiss market is hard. And also be kind to yourself. We are in the middle of a pandemic. The market is not normal at the moment. But yeah, carry on, because you will get there in the end. Hopefully I'm within time. Thank you for listening.
Thank you, Emma. And I must say it's a very tough slot of 15 minutes, so very well done. I absolutely look forward to next face-to-face meeting again in Switzerland. Well, thanks very much for this interesting presentation. We had a couple of questions coming in. Time is unfortunately too short to do a Q&A. We'll see that either those can be taken on the breakout sessions. We actually have Emma, but also two colleagues, John and Hannah, join. Hannah is responsible for the Netherlands market, and John for the Geneva area. And then if those questions cannot be answered there, we'll make sure that you get them answered as well. With that, let's go to next session. Marco.
Thank you.
Thank you, Emma. Thank you, Hessel. I'm happy to shortly introduce the two speakers of our next session on innovative budgeting approaches. Professor Klaus Möller is the Chair of Controlling and Performance Management at the Institute of Accounting, Control and Auditing of the University of St. Gallen here in Switzerland. He has been with the university for almost 10 years now and is also a member of the Switzerland chapter. Klaus has been named IMA's honorary professor and is the author of 10 books and more than 300 publications. His research focuses on integrated performance management, and together with his team, he developed the St. Gallen performance management model. We also have Franz Winsberger with us. His career has mostly been associated with Hilti, a Swiss manufacturer of products for the construction industry. He held various finance positions, including that of being CFO of their regions, and he also was the group CFO for 10 years. In 2013, he initiated the Hilti Lab at the University of St. Gallen and has since been the director. The Hilti Lab develops practical understanding with scientific insights of corporate performance management systems. With his experience, Franz knows the pain points of organizations, and the lab has advised a selected group of around 10 companies already in implementing new management systems. Welcome to the both of you, and we are looking forward to your input.
Great. Thank you. Marco, for the introduction. Okay. I should now be able to steer. Yes, wonderful. The resolution seems not to be optimal on my screen, but I hope this is better at your screen, so I continue with the introduction of our talk. Is it okay? Marco or Hessel, can you maybe give me a feedback on that?
It's okay.
All right.
Just go ahead. Thanks.
Okay, thank you. I would like to very briefly introduce our background. It's not so snowy like in the background of Hessel. It's a little bit more green because we are in the eastern part of Switzerland, and for all of them who are more familiar with that, our sign is also green, our corporate identity. So briefly, some words about St. Gallen and mainly the university, which I'm now serving for 10 years. It's a comparably small school, a business school, I would say, and I'm currently also serving as a dean of the School of Management. We have quite nice rankings. We have a lot of external funding, and the cooperation with Hilti and funds as a team member of my chair is also a nice example of that, we are very often in very close collaboration with practice. And what we are doing here is also a lot of executive education. We have an own campus, which can be seen on the down right picture. At the chair, I'm dedicated to two areas, and we will go a little bit more into detail in the performance management area, where we will show you a couple of insights. We have decided not to talk about business analytics, which is also a topic that I researched for a decade now. There are very interesting topics happening, especially in the context of budgeting and planning, so automated forecasting, machine learning in this area. But this is not the topic of today. As Marco already mentioned, we have developed over the last years a framework which we call the St. Gallen Performance Management Model. And as you can see here, there's also a web page that's completely dedicated to explaining that approach, spmm.ch. We are working together with around about 30 companies, as already introduced, and that's basically the background. Now we have planned to talk for the next around about 30 minutes and then have also some discussions. So feel free also probably a little bit later on to write some questions into the talk that we can later on discuss. We have planned to cover three areas. I will give briefly an introduction why planning and budgeting is necessary at all, and where we are standing currently from a theoretical but also from a practical point of view. And then we go a little bit more into detail in behavioral issues with planning and hand you over also our standpoint in a way and also some ideas for solution at the third part, and then as I introduce, we will go to the Q&A. So first of all, let me briefly introduce planning and budgeting as an extremely important part of financial steering of a company at all. I'm using here the IGC controlling process model. We are in close cooperation also with IMA, who is also participating in the IGC. And maybe if you not have already discovered the webpage igc-controlling.org, that's a valuable resource where we have, for example, also this controlling process model book as a download version on the web page. And there, as you can see, there are three processes within controlling which are dealing with all the planning issues. So we have the more qualitative areas like strategic planning. We have the operational planning and budgeting, of course, and the forecasting. If we look into the consumption of the resources in the finance function, we can also pretty easily see that at minimum 1/3, even nearly 40% of all the capacity is consumed by planning and budgeting. So it seems, and probably that is an experience that you do day to day, and especially in these times, yeah, in the now beginning period, you devote a lot of time into planning and budgeting. So it's a really important resource. There are a couple of studies out whether this part increased or decreased, but still one can say it's a really very important topic overall in controlling. So the question is, why is it that necessary? And therefore, I would like to introduce the 4 functions of budgeting in order to make clear why we do it. And later we come back exactly to these functions to explain a little bit our innovative approach, I would call it, which I also will explain briefly. So budgeting started around about 100 years ago in the area of complex manufacturing works, where it was necessary to have a coordinated procedure of the production. So especially if you imagine an automobile producer, it's pretty important that you don't forget to order tires, because otherwise you can maybe produce a nice carrossery and an automobile, but you cannot finish that until you don't have the tires. So it's an important thing to coordinate procurement, production, in order to have really good processes going on. So a very technical procedure, I would call it. Then if you go a little bit further on, we arrived at the oil crisis, for example, where discontinuities appeared. So oil price dropped, the buying power were extremely low, so automobile producers to continue that example, faced serious problems in order to just continuing their planning. So we incorporated also a prognosis function, scenario planning, strategic planning, so much more dealing also with uncertainties. And what then later on during the further decades happened was much more of the integration of behavioral issues. So of course, participative budgeting appeared around about 1980. So it's a good idea to make the addressees also part of the solutions of the planning. So integrate all the different units, not start or do a completely top-down exercise, but combine, for example, a bottom-up and a top-down approach in order to have this interactive sort of budgeting. So you would like to integrate initiatives, so solutions in your planning, and of course, all these behavioral issues. When we look back in the last round about 20-25 years, we can see that a couple of innovative approaches emerged also. Starting 2003 with the book Beyond Budgeting. Probably a couple of you are familiar at least with the ideas, maybe with the book. I was a participant of the translation team there. Back nearly 20 years, we translated the book into German language and had an intensive cooperation with the Beyond Budgeting Roundtable that emerged and get a lot of attention. So they were basically offering, saying, okay, it doesn't make sense to continue with this very intensive, time-consuming and labor working consuming procedure of budgeting. So let's get rid of that and replace it with different things. Then we had, of course, behavioral issues, and now we have other things going on, Brexit, COVID, and I'm sure, and probably it's your understanding, we will see even more discontinuities in the next weeks, months, or years. So the big question is it still relevant and interesting to continue with that? And now if we look into practice, it's quite surprising that most of the companies, and studies are of course differ here a little bit, but most of the companies are still doing the budget in the old-fashioned way of looking back how we did it last year, 5 years ago, and then based on that making an upgrade or a downside on that, but basically very much relating on the figures of the past. And all these modern approaches like beyond budgeting, zero-based budgeting are only in a niche. So that's a big question. Why is this the case? And therefore, I will go a little bit more into detail in the area of behavioral issues, because I think this is one of the crucial parts where and why a lot of things go wrong. We have here a polling question. And it would be interesting to see whether, what do you think about planning and budgeting, whether this is well adapted to your current business environment. So we have these 5 options, and I'm curious to see the distribution of the different stages. So you may have in the meantime voted, and okay, yeah, that's interesting to see, and it mirrors in a way exactly the distribution that I showed a little bit before, that half of the attendees here say, okay, it's adapted, and I'm sure that you are not all doing a completely past-oriented approach, and round about nearly the half, 41%, disagree and say, no, this is not anymore the right approach that we are using. So we see that there's a lot of pressure on the overall procedure. We will come back on that result later on. So thank you for that insight. Okay, let's go further. Wonderful. Yep. Okay, so I would like to go into detail a little bit more about the behavioral issues, and I start here with very just briefly saying, okay, this is also an old story in a way. So this article, very often cited, is quite old. Okay, it's from 1953. So we have identified quite a while ago the problems that people have when we integrate people into the whole procedure of budgeting. And here I would like to make a quick experiment with you and show you here a situation that you are facing, and I would like to ask you, I mean, I will not read it completely, you can read it by yourself. I've opened the chat and I would like you to type in the number of units that you would submit for budgeting. You 350, okay. 400, okay. Who's bidding more? We are, seems to be on an auction. Okay, we have Philip Müller, and he's bidding 550. But if I'm looking here on the chat, most of you are, of course, bidding somewhere below 500. And that's exactly what has also occurred in an experimental setup. Let's check whether I can, okay. Okay, that was divided into 3 groups also. So the experiment was a little bit longer to say, okay, you could reach a next step in your career if you are really reaching the budget. But even then, participants were not submitting 500 or even more. So what you can see here is very dramatically and very directly the budget gap or the remaining part, so that you are always underestimating the budgetary slack. I was missing the word, the budgetary slack that occurs in very, very much companies. And that's exactly the difficulty. So you need to think about what is the right target setting. And we will present you later on a possible solution for how we see and understand how the target setting process should look like. And it should not based on the 500 units that you usually take from the past. So it should be, I'm going a little bit forward, it should be potential oriented. So much more based on the potential of the market and much more oriented relative to the market. So now we are in a very serious downturn. So defending maybe 300 in such a downturn market is a great effort. If we are now going up, maybe hitting 700 is a low target. So it depends very much on the conditions, and the usual procedure of budgeting and target setting is usually not referring to this. So this is a nice example of how this is going on. Of course, there were a couple of solutions. As you can see here at this nice overview. Oh, I'm a little bit too fast clicking. Hopefully it goes back now. Again, regarding the different approaches. Okay, I should be at the slide before. Okay, oh, that's too much, sorry. Maybe Leanne, you can steer the screen. We should be at the beyond budgeting at the 3 areas. Here, wonderful. Okay, there are a couple of answers out. Beyond budgeting is promoting a radical change, basically saying, okay, we don't need budgeting at all, but it became very unclear what instead companies should use. So, I mean, getting rid of the budget is nice, but then a huge unsafety occurs. What to do? What is our target? What is a good performance? What is a bad one? So further approaches were developed, especially in the beginning of the 2000s, the years, better budgeting, advanced budgeting, but all these approaches were not really successful. I like pretty much the graph that I put on the right-hand side. It's a sort of recommendation when to use what. So at the lower right part, with high complexity and low dynamics, you have the classical budgeting. And this is, of course, a nice and good recommendation, but I would say in which business we have this sort of labeling low dynamics and a high complexity. I think we are worldwide, globally, in a high dynamic environment, and therefore classical budgeting is in a way outdated. But we have, on the other hand side, a high complexity in most of the business models. So beyond budgeting, which is signaled by low complexity, is also not really a valuable possibility. And that leads me to sort of the first idea of how can a solution look like, and that is more the overall background of the whole story. So basically what are we recommending is to develop from a command and control principle, and that was very feasible in the manufacture times, in the early industrial age, in the Taylor epoch, so to say, and further develop on to a guided self-control in order to deal with agile organization, in order to deal with the environment, which is now relevant from volatility, uncertainty, complexity, and ambiguity, VUCA, as we usually refer to that. What is exactly behind that? We'll show Franz in the next charts, and maybe we will come back to that chart in the discussion. That's the main principle. So going apart, going away a little bit from this very strict command and control, saying, okay, I expect 500 and you need to meet the target of 500, but more leaving freedom and also a higher degree of self-control to the different organizations in order to that they are able to steer themselves a little bit more. So Franz will now show on a little bit more of the solutions.
Yeah, thank you very much, Klaus, for this introduction and trying to take over the control here. I think, do we have another final question, Marco Hassel? Polling question. Yeah, exactly. We had a polling question. Can you book that up back again? Okay, here we go. It was basically a question around what is the volatility environment in your company at the moment, because Klaus showed that this is a driver for complexity and that planning and steering systems should cater to that, but not everybody has the same context. So that would be interesting to understand a little bit from the audience to where you stand. To start off with, thank you for your feedback. Okay, I'm sure. Oh, we see. Yeah. So there seems to be a really high volatile environment. I mean, everybody is impressed by VUCA, by Corona, of course, right now. But I think I'm sure you reflect beyond that, and this is a general trend. So that's confirmation what we expected to be to see. So now I'm trying to move on a little bit and give you, as Klaus already indicated, an idea about what could be an alternative solution. Now, if I manage to get this going, otherwise I need some help here. I should be having the control. Doesn't seem to work. Oops. Oh, sorry. Now I lost it completely. Okay.
Maybe Franz, if you click into the presentation.
Yeah.
And now move forward, it should work usually.
I'm clicking. Yeah, okay. On one back. No, we're too fast. Sorry. Yeah. One back. Oh, here we go. Yeah, thank you very much. Welcome, and thanks for the invitation also, Marco Hassel. Trying to go fast through this solution right now in the interest of time. When we started this Hilti Lab like 7 years ago and found Klaus at the chair of performance management at the university, we were motivated from an experience at Hilti where we changed like 15 years back already our budgeting approach. But we came more from a cultural perspective where we really wanted to tackle those behavioral issues which Klaus mentioned, and also get bit much faster and more agile as an organization. And we had some good experience, but we found actually that, you know, this working on this interface between behavior influence with system changes was significantly more successful than we thought, but we didn't really fully understand what happened, and saw that there is really much more opportunity, and that was really the motivation for formulating this lab and the cooperation with the university. And at the lab, we were looking at the framework to kind of show this change, describe this change towards a more agile organization. Like Klaus also said, that it needs more self-control. This comes out of organizational theory, out of system theory, etc. And we found this framework, which you see here on the screen, which describes two dimensions basically of change. One is to change the entire leadership and steering system away a little bit from a hierarchy supportive pattern to a more self-control supportive pattern. And the second is another dimension, a cultural dimension, where it's about mindset and leadership and understanding of role, which needs to also change towards a more contemporary understanding of roles, leaders as a coach, a high level of self-responsibility and a high level of trust, really, to bring this all together. So this is the framework we were using, and we were coining actually an expression Klaus already used to describe the management principle behind that, which describes kind of the difference between command and control, which you see here a little bit characterized with the focus of alignment and high efficiency. The environment is stable, it works well, steering with detailed targets and budgets, individual incentives to really keep on track, measure the deviation, and the leading philosophy is more a carrots and sticks, more emphasis, a high emphasis on transactional leadership, as opposed to more complete self-control approaches, which an example would be, you probably know this system of holacracy, which is really complete self-control, but it's more about innovation, evolution. You steer, you don't even have a budget. You steer with purpose, you steer with a constitution, with a role description. And it's based on leading with self-organization. Leadership roles are there, but they change based on competency. It's a democratic process. It's a self-leadership process. In our experience from practice, we said, yes, that's clear. That can be useful in certain circumstances. You see this, for example, in consulting companies, etc., being used. But from most of the companies, like Hilti was one of these companies, also like many born, in a different age, with complete different paradigms coming from a different world. This change is probably too big, and a change in the middle, where it's about getting more agile. It's about really steering still with strategies, with targets, but recognizing that the world is getting more complex. So individual incentives probably need to be more team incentives, because it's more about teamwork. You need a team to get tasks accomplished. And instead of measuring target deviation very closely and keep on track focus, moving that away into more a continuous improvement and measuring progress focus. And the leadership approach also changing that way in the direction of challenge and promotion, with more emphasis on transformational leadership, which is, by the way, I would say the contemporary view of leadership research at the moment, that this is the most successful leadership style. Now, this we described that as the basis, as a change direction, basically, and we used a little bit a normative approach here, which is kind of new also, or not very usual at the university, that we come up with a solution, with a system to suggest, to test that whether this is working better. What we did actually at the lab is we spent a lot of time in investigating what really happened at the base case there at Hilti, where we went through this change for 7-8 years already. We really documented that in a scientific case study, and merged that with the help of Klaus with management control theory, and basically started to describe what really happened, because we experienced that positive movement. And what we found out is exactly what Klaus said before, that what actually helps to get more change the pattern away from a command and control system into a more self-control system, is if you separate the functions of the traditional fixed planning and budgeting process where everything is in one package, basically, the motivation function, the coordination function, and separate the target setting or the motivation function out of it, and deal with that with a more rule-based relative target system. Klaus alluded to that already. It's a the concept is that basically you define your North Star in relative terms, be it CAGR growth, be it return on sales numbers, something like that, or benchmarks to external, which is really a rule. And the rule could be simple. At Hilti, for example, we started with dividing our sales word into 6 categories and said they are the ones, the best penetrated markets. They have to grow much less than the ones which are least penetrated, and so on. And this was a rule, and there was a bit more to it. And I'm going to show an example in a minute. And that helped to really completely decouple a bit the target setting function from the rest, which is the coordination function, and enables actually more flexibility in the entire system. What has to come with it is that with this change, also the other practices, the key practices, which is, for example, the measurement system, they have to change as well. You cannot basically measure the target deviation anymore if you set targets in a different way. So you change and come up with a system which is more monitoring progress towards the strategic targets. And the other aspect which needs to change is the linkage to the incentive system, because linkage to budget is not possible anymore, and also not useful. So it's more a linkage to strategic targets, and then managing, participating teams in the progress of performance. And finally, this enables then also a more rolling forecasting process, which has nothing to do with target setting, but it's really focused on the coordination function. And this is basically the system we were describing, we were actually experiencing, and then finding out that this combination, it's not really new, but except for the target setting system, where I think there's some innovative elements to it, but it helps if it's integrated well, again, in a loose coupled way. It really provides for much more synergy, and the various practices support each other, which is often not the case with the traditional planning system, especially when it's applied in a more volatile environment. This is where the misfit we found is. Now, this is an example. I'm diving into some of these characteristics right now, or elements of the model, which shows how the measuring system changes when you change the target setting system. You see at the top here, the target setting system actually involves also a structuring of the targets along these major value creation dimensions, financial value creation concepts, where you have growth targets, profitability, capital efficiency. We call this the house of performance, and you cascade that into the organization along profit, service, and cost functions, or profit center, service centers, and cost functions. And you have a target rule, and you start somewhere on your normalized basis, and add your strategic ambition, like here a North Star or a flag at the mountain. And what you measure is really the path towards it. You measure the strategic gap, and you use much more rolling numbers, for example, 12-month rolling numbers, and measure the progress. So if you have a target of 5%, or you have a history of 5% growth, for example, and your target would now be 8, your strategic targets, you can also work very well with stretch targets here, then anything which goes beyond 5 would already be a progress, but anything which goes back, for example, below 5 would not be a progress. So you change really your assessment logic of performance in a very pragmatic and conducive way for motivation also. At the same time, as I alluded already, the incentive system link needs to be changed. It's in this system, it's not possible to have this strict keep on track focus and linked to budgets. It involves also a paradigm change here at this point in time, because as the objective is to really get more agile and be more self-organized and self-controlled. The findings from psychology, also from theory, is that the link to budgets or individual bonus to budgets is really not helpful in this context, because it's really rather hurting because complex task completion is really different to measure, difficult to measure, and a participative concept where you link bonuses to team results is much more supportive in this way. And this is also what we experienced. And this change can be made quite easily, as you see also in a simple example here, where a company changed completely away from their individual targets, linking everything to the group results here, for example. When before they were measuring, for example, on the profitability I mentioned here, the return on sales to budget, and linking that to bonus. Now they basically just set a straightforward return on sales number and say historic level is worth X and strategic target level is worth Y, and automatically you are in a more participative mode, and so on and forth. That can be done for any other, of course, KPIs as well. Now, the last main element of this model is that once you have set the targets with this rule-based system, you can much better apply concepts like rolling forecasts, or what we would describe here, a sense and respond principle of rolling planning and forecasting. Rolling forecast in this concept serves the basis of really, monitoring the trend, understanding where is the financial trend going towards. It's using driver-based, very lean concepts, not comparable with a detailed budgeting, but you step up the cycle. For example, a 4-monthly cycle. We find this very useful for large organizations. That could also be a shorter cycle. And with that, in the first step, the forecast uses a function of prognosis, and then the real issue is about the purpose is about really having a detailed discussion, a bottom-up driven detailed discussion about what do we need to change in our plans. The entire process described here is really completely bottom-up driven. It has nothing to do with a classical budgeting process. We have observed many rolling forecast concepts in our work at the lab and the chair, and had also observed a lot of rolling forecasting process which have went sour, because they have basically helped to tighten or even improve the command and control philosophy, because they have been added to in addition to the existing budgeting system. So you basically have one more element which controls budget achievement. This is different, the system we describe here, and you also try to go away from this year-end focus, this strict year-end focus, and apply more 12-month rolling concepts in the forecasting. We're still always having an eye on the year-end, because obviously bonuses are paid on a regular basis, on an annual basis, so it still matters, but not so much for steering purposes anymore. So that's the element of rolling planning and forecasting. And if we add this up and look at what happened there, and this was our experience also here very strongly, we saw that this change in system design, and it's, as you see, it's not really very new, except for maybe the target setting system. The change in the system design, the combination actually also has an impact on behavior. It makes a difference if you set targets very detailed in an absolute way and in a safe way, which is often happening in a budgeting context, or whether you set them in a focused on relative way. And with stretch, you either have a behavior of forced security, or they emphasize that behavior, or you foster behavior of entrepreneurial spirit. The same on the reporting side. If you measure plan actual very detailed, or versus you monitor relative progress, it really promotes on the one side an inward orientation versus an outward orientation. If you have relative benchmarks, for example, also if you link it to targets, to strategic targets, you have a much more longer term orientation without losing really also the short term focus, because you monitor it constantly. The same on the incentive system. We found that this linking to budget really is, as you probably experience in practice a lot, promoting tactics. Klaus mentioned there's many behavioral issues with budgeting, but if you delink that and link that to team progress, you actually promote collaboration. And this is also very very helpful from a psychological and motivational point. It supports intrinsic motivation, whereas the first one actually has the risk to be detrimental for intrinsic motivation, even to crowd out. That's a term in psychology which is used for that situation. Also, planning coordination. If you have a very rigid, number-focused approach, many planning approaches in companies which have a lot of emphasis on the rigid budgeting system, they really don't talk too much on content, but more on numbers, and that's leading to a more reaction orientation. You look more in the rear mirror than you look in the front. If you apply like a rolling forecast, which really looks forward, and you constantly have the discussion about where's our trend and what are we doing right now? What are we doing with this situation? You see it now in for example, a situation like Corona. It's a typical situation where companies drop all of their traditional planning processes and really start thinking in scenarios going forward. And in this process, which we suggest here to look at, it is included actually in this forecasting process, that you think in scenario constantly, because you have a more volatile environment. That is in some assumption. Now the question would be, final message here, how do you get from a traditional setup into this more agile setup? And our experience in these tests, or also transfer projects which we did with the help of the lab and the knowledge of the lab, is that it's actually a revolution first a little bit in thinking, when you have to go away from this command and control principle and apply more of this self-control or guided self-control principle. But it's actually an evolution in implementation. It's I would even say it's rather easy once you have understood how it's happening. First, you change what matters. Basically, you change your target setting system towards this rule-based relative target setting system, and link that with the incentive system, and emphasize more team progress concept. That will automatically change a lot of the behavior in the organization. And then it's a good time to really, in the next step, then work on these measurement practices and rolling planning practices, and get more and more into the content management. And this is also in the last step. This first two steps basically are preparatory. Basically, you enable the entire system for applying much more agile systems further on in the organization. And it's very synergetic, we found, with a lot of corporate development initiatives going in this direction of increasing agility. Concepts like objective and key results, OKRs, or an agile MBO method, you may be familiar with that. It's also not completely new, but it's more agile. The design patterns of the OKR system are very similar to this guided self-control principle we describe. It's about strengthening intrinsic motivation. It's about faster cycles, working with stretch targets. So it fits very, very well to this design we found, and also synergies with initiatives like Lean, etc. So this is the pattern we suggest to go through. Yeah, that is meant to be an impulse here. I think we don't claim that this system is working in all situations. It really pretty much depends on what your context is. Command and control has been extremely successful in the past, and still is in many organizations. It really depends on the context. And if you sum that up, Klaus, please also come in then and add your comments to that. What we take away, or what we would like to convey to you from our both parts, is that traditional budgeting is really a mix of different functions like Klaus, and it's always a compromise. And in a VUCA environment, this traditional budgeting is working less and less good for the obvious reason of force position, rigidity, slowness you have. And what we found really with that experience, which comes from practice, is that once you separate that, you entangle that budgeting function into different instruments, you enable a much more agile setup. And especially important for us, we found that this relative target setting was really a game changer in order to enable this separation of functions. And at the end, like I said, on this roadmap, we have also to recognize that the budgeting is one practice of many practices in organizational agility development, but it's a very strong, basically, change we experience at Hilti, a strong enabler to really bring the organization forward, stronger than many other culture development initiatives, for example, which are difficult to really get to the ground. So far, my conclusion. Klaus, any further comments from your side?
Yeah, maybe a last remark on the fifth statement. We have discussed quite intensively the relation towards beyond budgeting, and we think the colleagues of Beyond Budgeting were in a way very right to identify budgeting as a compromise practice, as we stated in our first statement. So it's really good to work on that, but to declare budgeting as the enemy is maybe not a good move in order to get rid of that, because then you are always in a conflict and in a confrontation in the company, and especially within the finance team. So it's better to provide the organization with an alternative, and with this self-control paradigm, we have that, and we put that into an overall system, as I explained in the beginning, with the SPMM, with our St. Gallen performance management model, where budgeting is only one part. That makes it, from our experience, much easier not to go directly to fight budgeting, but to say, okay, we are just slightly changing some practices, and after a while, your overall practice of planning and budgeting has completely changed. But if you start to discuss, get rid of these practices or the overall procedure, it's a big fight, and the probability is high that you will not win that, because of course there are strong arguments for continuing with traditional budgeting. So that's maybe as a last remark. I think we will have the opportunity later on in the panel discussion, and also in the rounds at the end, in the networking rounds, to discuss a little bit more how to approach these kind of solutions.
Yes, exactly. Thank you very much, Klaus and Franz, for your presentation. Some questions are now popping up, but I'm sure we'll come to it during the panel discussion. We are now having and earned, I think, our first break here, first 5-minute break, during which we will show you a short video. So talk to you later.
Okay.
Let's face it, planning your career can be challenging. You want a next step, but are struggling to get started. You're not sure what career tools are available. Sometimes there are too many options, sometimes too few, and sometimes you're simply stuck. Wouldn't it be great to move forward with your career? That's why at IMA, we've identified 6 key disciplines that integrate the 33 critical skills you'll need to excel in the finance and accounting profession. We call it our competency framework, the foundation of our professional development tool, Career Driver. Let's take a spin. This exclusive IMA tool helps you assess your skills, plan your path, and envision your future. See, with Career Driver, mapping out your professional journey is as simple as 1, 2, 3. Step 1. Assess your skills. Wondering how to evaluate your skill set? Take our easy self-assessment to measure your strengths and growth opportunities. Step 2. Create your personalized development plan. Trying to close some skills gaps? Set your priorities. Form an action plan with our vast library of resources and steer towards your goal. Step 3. Explore your career options. This is the best part. Get a snapshot of your future by mapping your skills to 46 job roles. So take the guesswork out of career planning. Your future can grow brighter with Career Driver, a tool that puts you in control on the road to success.
Hi, my name is Ron Guyman, and I'm on the faculty here in the School of Accountancy at the Geese College of Business. The data revolution and analytics are disrupting the traditional approach to nearly every profession, especially accounting. Are you keeping up? If you'd like to gain a foundation in data analytics using familiar tools like Excel and Tableau, then this course is for you. Gain a framework for converting data into actionable insights. Boost your appreciation for and experience with assembling data, which is a critical but often underappreciated skill. Expand your knowledge of data visualization principles for exploring data and communicating results. Experiment with some powerful advanced analytic tools, including regression and task automation, which make it possible to quickly gather insights from big data. So keep up with the data revolution and start today.
The goal of this course is to develop a foundational level of knowledge in the area of blockchain technology. Through a gamified approach, you'll explore and experience the various types and applications of blockchain. By allowing digital information to be distributed but not copied, blockchain technology created the backbone of a new type of internet. Originally devised for the digital currency Bitcoin, the tech community has now found other potential uses for the technology. Blockchain has the potential to revolutionize and reshape how accounting and finance is done. In order for this potential to take shape, it's necessary for management accountants to understand what blockchain represents.
So welcome back. I hope you enjoyed the video. I think Jaime has been doing a great job in making those courses available for free for us. I did both the data analytics and visualization certificate and the gamified blockchain course, so check them out. Now we move to the panel discussion on managing costs without budgets. I often ask myself, how can we as management accountants do a better job at budgeting? Can the process be easier? So most of us are aware of the limitations of traditional budgeting. It can be a very time-consuming exercise, as has been mentioned before in the previous session, and often with limited value as assumptions are quickly outdated. Moreover, I think decisions are often made too early and at a too senior level. I think the case study of the manufacturer Hilti is quite interesting. So they have successfully abandoned budgets altogether and manage now their business more dynamically. So let us now hear from CFOs and academics about their experiences and lessons learned. Also, I encourage you to continue to use the Q&A to post your questions. I'm sure we will have some time after. So to start, I would like to introduce Martin Zwisig. Martin has a broad experience with roles as CFO and senior finance executive in various industrial companies. Although he started his career at UBS, a global Swiss bank, he soon found his passion for the manufacturing industry. Currently, Martin is the CFO of Rehau, a global polymer processing company. In the last 15 years, Martin held positions of CFO for Schaffner, a global electronics company, Ascom, a telecom company, and more recently, Autoneum, an automotive supplier. At the Swiss CFO Day in 2018, Martin was named CFO of the Year in the category Swiss Performance Index. The SPI, Swiss Performance Index, is Switzerland's most closely followed index of the stock exchange. So we are very happy to have that you have found the time, Martin, today to join us. Martin will now share his views and experiences on budgeting. So Martin, welcome.
So thank you, Marco, for the very friendly introduction. Hello to everyone. I got to know Marco a few years ago when we met at the University of Applied Science in St. Gallen. Marco at that time was still student and I'm a little bit longer. In the meantime, a little bit younger. In the meantime, Marco works at Autoneum, the company I've been working for the past 6 years as a group CFO, and that's the company I am going to refer later on. That was until this March, before I joined, as Marco mentioned, Rehau again as group CFO. Now, what is my experience in budgeting? After what also Marco mentioned, I joined UBS in 1997. I got group controller at an industrial company, also listed. And ever since budgeting was a main topic. And honestly, until I changed Autoneum, the budgeting process didn't change. Also under my leadership, not very much. We tried several approaches, tried to make the process leaner. But I think the common denominator over the past years was always it's a heavy burden. It's cumbersome and not worse, in my very personal view, not worth the amount of work put into budgeting. And the question is it really, and I mean, Klaus already got some insights, but that was also a question which drove me, is it really a performance or the right performance management tool? When I joined Autoneum in 2014, it was the biggest organization so far I joined. Autoneum makes roughly 2 billion in sales. I studied again the budgeting process, and it was heavier than in every other company I've been working so far, but it was very well organized. And again, I thought, is it really worth the amount of work? Maybe I have to describe how Autoneum is first of all structured. It has a group controlling a corporate center, and then for the regional divisions, it's automotive. It's the same business around the world, and therefore it's geographically organized. From a planning point of view, Autoneum has a very well-designed strategic process. When I joined in 2014 for the first time, we put a real, let's say, number grid behind the strategy. That means what are the costs of the strategy, what is the valuation coming out of the strategy, and then the strategy, or the first year of the planning period, was then used as a target setting for the first year of the target setting was then used as a budget, or as a budget target. And again, the discussion usually then in December was, what is the difference between the strategic planning first year and of course not meeting, or the budget not meeting that first year of the planning period. And again, heavy as it can be then afterwards, the budgeting process after the strategic planning. We had a very well established 6-month rolling forecast, and our idea, and that was maybe one of the mistakes we did at that time, because it was a finance-driven initiative. We said, okay, we have a 6-month rolling forecast, which, let's say, in March or April substitutes already the budget, because it's much more accurate. We have a clear focus on where are we ending up towards the end of the year. Performance management was still the budget, but for managing the company, we used that 6-month rolling forecast. And we thought, why not using that 6-month rolling forecast, extending it to 12 months and using it as a budget? We started that initiative and had a discussion with the divisions, with the controllings of the divisions, and the obvious questions were, how should we manage our costs without a budget? Or how, that was then more a question of how should the variable compensation be regarded when we don't have budget anymore? Other questions like, how should a single cost center manager have guidance throughout the year? How should he know how much he can spend on traveling and whatever? And it was a heavy discussion. We had then the discussion with the board of directors, and there was then probably the biggest learning. You need to, and I think Franz very well explained it, you need to have from the board of directors, management, you need to have the willingness to change to a new approach. If it is driven from the finance organization, as it was with Autoneum, it's very likely that you can't really change the process, because it's not it's not enforced. Board of directors has difficulties with the performance management. The CEOs of the divisions, they are used to traditional budget. They have a clear view on how much can I spend and so on. So you need definitely to have, first of all, the buy-in of the board of directors, CEO, and group executive. That's, I think, the main learning. So what did we after that? I mean, we completely failed with our first approach. We said, okay, we are not able to, because there's too much of resistance from the business groups. Before we need to culturally get to a view that this process is too expensive. It's not for an agile organization, or it hinders you to be agile. You need to first put that in place before you can then go on to change your budgeting process. And going back to what we did is we made a lean process. So we skipped all these hours and hours in common meetings. We scaled down the participants of meetings. We made more of a top-down. For example, group budget was not again or not anymore discussed lengthy with all the business groups or divisions, etc. It was a decision. That's the budget period. So we went to a leaner process, a faster process, I would say. So if I refer to Klaus's slide from beyond budgeting, which was the failed approach so far, to a better budgeting. But I mean, better budgeting for me was always, okay, that's an interim step. It's not actually where we want to end up. That advanced budgeting is certainly where we have, that should be the long-term goal. Now, I mean, I have left the company. I learned that the budget process so far has not yet really changed. Of course, Autoneum today, as a purely automotive supplier, has clearly other challenges right now than to think and elaborate on a new budgeting process. But you should do that at good times, which certainly Autoneum had. So I'm very convinced that all these let's say topics which were mentioned, cost management without a budget is not possible. That's simply not true. I'm also at the board of directors of another listed company called Belimo, and we are also still in kind of a traditional budgeting process, but we are very much working there with cost ratios. So again, I refer to what Klaus said with relative numbers. You can easily work with relative numbers and break then that down to an absolute number. Compensation, in my view, to have a budget is not necessary at all. You can have any reference point, in my view. You don't need to have or compile a budget to be able to calculate the variable compensation. And the same with cost ratios, also account to single cost centers, etc. So it's just another way of thinking. It's another way of managing the business, as it was mentioned before. So for controlling costs, having targets, a budget, in my view, is not necessary. It's not necessary at all. But you have to start from top. You have, as a CFO, to convince, first of all, the board to have that discussion, first of all, maybe in the audit committee, get an approval or a common understanding there, then put that discussion into the board, and then you can break it down, starting with the CEO, have his buy-in, and then roll it out towards the organization. So
Good.
that as a first input of experience of what we did with budgeting over over the past years, and I'm very convinced that we are actually at the point where everyone understands that we can't afford to put that much amount of work and therefore money into such a process.
Good. Thank you very much for your perspective, Martin. I think it has been very valuable and also very detailed in a way. And it also shows that how traditional budgeting is still widely used, especially in industry, right? But with better budgeting, you were able to make some improvements. And I think there's also something you hear when you talk to other Swiss CFOs as well. And yeah, I can feel that you believe that there is a pressing need to switch to a different approach. So with that, I would like to welcome all the other panelists to our discussion. Klaus Möller, you've already heard, Franz Winsberger, and also Paul Juras. Paul Juras is IMA's chair-elect and will take over from Christian Cusick this July. So Paul is an accounting professor at Babson College in Boston, Massachusetts. He teaches managerial accounting and strategic cost management courses. His recent research focus has been on building the business case for adopting Industry 4.0. We are looking forward for you to present on that topic a bit later, but first we will discuss planning 4.0, as Franz and Klaus highlighted before. And yeah, Paul, welcome to the panel.
Thank you. Thank you.
I see we have everyone on. Very good. So we have another polling question first, because we'd like to get your view, and they are interested to know which of the following answers describe best the planning, budgeting, and forecasting process in your company. You can choose multiple answers. So is it based on, do you use rolling forecasts? Do you already have implemented some predictive analytics tools and machine learning for forecasts, for example? And is it mostly driver-based, meaning the financial forecasts are done based on operational drivers? Do you use predominantly relative targets rather than absolute? This has been mentioned already before. And do you also have a significant portion of non-financial targets, like the balanced scorecard approach? Okay, we have a look at the results. It's very interesting. A lot of you use rolling forecasts, so that's already quite a good step. So maybe Paul, your reaction to the polling results?
Well, certainly it's interesting to see that the use of rolling forecasts, but based on a lot of the work I've been doing lately, I'm particularly interested in seeing, the fact that there's a lot of non-financial targets, and which is kind of aligned with some of what we've been hearing today. It's not all about the money. And, I get into this a little bit more. Budgets serve a lot of purposes, and they can be used for many things. In fact, I saw one of the questions online was even, is it an administrative tool or is it more of a motivational instrument? And I think it can be motivational because no organization has a blank check. No one has unlimited resources, not even the Amazons and Microsofts of the world. And, but they do need to focus on a direction, a target. And, we often hear financial results are the lagging indicators of what we're supposed to be doing. So we're seeing here that there's non-financial targets. Well, to me, that ties into things like balanced scorecards and the idea of a strategy map that says, here's where we want to go. And now we need to make sure we deploy the resources to support the direction we want to go, which to me, then that's what the budgets can do. Once we identify our critical success factors, what we need to do well, make sure we fund those. And then from a budget point of view, you monitor how you're doing on the KPIs. It might be on-time performance, it might be customer satisfaction. And then do you redeploy resources to help reach those kinds of targets So it's a little bit different use of the budget, but the fact that we've got the non-financial targets here, I think this is really great. And I heard Franz in his talk earlier today, he mentioned, I made out here, sense and respond. And so if you're looking at your non-financial key performance indicators, you can see maybe where you need to redeploy some of your resources, which means you have to take them away from somewhere else. And again, so budgets kind of put collars around how much people can spend without getting permission. And so I think these are really interesting, and I'm glad to see, nearly a third of people have these kinds of targets in place.
Okay, very good. Thank you, Paul. Maybe I can ask Klaus to comment on the results on flexible relative targets are on here as well. How important do you think is this element? Do you have any other use cases?
Yeah, I mean, I was really positively surprised by what Martin Zwisig explained from his approaches, that he's also using relative targets. And I would assume a little bit that these kind of talks from Martin and from us also prompted a little bit the results, because usually when I talk with companies, they are much more inside looking or backwards looking on their own history, and set based on that their targets, and not so much relative. So if you go into detailed analysis, what is relative targets all about? There are a lot of opportunities. So you can set relative targets based on historic developments. It's also relative in time. You can say relative or set relative targets to the market overall. So industry indices, for example. Or you can concentrate on peer group, so you select competitors and try to be very precise in that. So there are a lot of differences, and I think we need to go deeper in a discussion maybe later on how the participants are using that. But I would definitely recommend to go more into this direction. And from my perspective, it's nice and positive to see that. A quick remark, maybe, because typically the response from practice is, wow, that's challenging. Financial data are not available, or they are available with a big timing effect, and that's too late for us. That's a typical reservation against relative targets. But my response is always, what is the alternative? The alternative is that you are predicting by your own genius as a CFO what is the right future. And I think this is especially now based on the experiences of Corona crisis, very clear that this is impossible. So it's a good idea to relate, like in sports, your performance to outward developments. So in sports, we have exactly the same thing. If you have a target time to run for a marathon, for example, you will not win it by just submitting, hey, I will reach that goal. The race is finished when all the people have crossed the lines, or when the first finisher finished. So we are also always focusing on actual performance and not on planned performance comparisons. And this is, from my perspective, the most important point in relative targets. So simply said, it's not easy to identify these relative targets, but it's very important to switch over to these.
Okay, very good. Franz, would you have something to add on that? Maybe what Klaus said, or based on the rolling forecasts?
No, I just can second what Klaus said based on our experience. I think looking at the rolling forecast core here, I'm not surprised that many organizations use really rolling forecasts, because what can you do in this uncertain environments, you know, that the use of fixed rigid budgets is really not very meaningful anymore for many organizations. But the question is really what I'm a bit doubting whether these are all used well, based on the experience we have. I mean, Martin also mentioned an experience he had, right? Many organizations have the same experience when they use rolling forecasts, while you have still the old paradigm in place of setting fixed targets. Basically, you emphasize your command and control principle, pattern in your steering system. You do exactly the opposite as what you would like to do, actually, make the organization more agile. This is the experience we see over and over, and therefore rolling forecast also has been burned in many organizations, you know. And I couldn't agree more with what Martin also said from his practical experience, that if you make these changes, you have to look at this change as a holistic thing. It's not about managing costs, it's about managing values, it's about managing performance, and it's a question about how do you do that better and better. And in a way, it's interesting because that change, once you have that consent from the top, the understanding about what it is all about and how you change your control system, because that's a positive change, you know, and it helps the culture of the organization. It helps the performance orientation of the organization. You don't lose control. Once you have that consent, once you have managed to convey that message, then it's easy to change the system. It's actually almost a walk in the park, if you know a little bit how you do it and have experience like Martin has, for example. But if you don't have it and you work against that, you know, that paradigm, and people haven't understood it, then it's very difficult to change that, because easily you touch the DNA of the organization. You get the top management gets the feeling now it's getting out of control if we abandon budget. We don't manage our costs anymore. And that's not true. It's actually our experience has also been exactly the opposite. And then to Paul, yes, of course, this change in paradigm helps basically orientation towards more the content piece of the performance management, focusing really where it matters. You know, this is the non-financial part. The financial targets are there to give the big orientation, basically, you know, to make sure the organization moves overall in the right direction. But how to get it there, you know, how to do it, this is really a lot of hands-on work, which needs a lot of steering mechanisms and setting of different levels of targets on content basis and qualitative elements on drivers, etc. OKR concept, for example, is a very, very good concept to do that. It's about target setting, outcome orientation. You do a lot of target setting in that, but the context overall is the financial setting is a different one. If that gets too heavy, then it slows down, it's our experience, really the progress of the organization.
Okay, very good, Franz. So I have a follow-up question here. How much is your approach different from beyond budgeting? If you can mention in a few words.
Yes, thank you for that question, because it's always mentioned that's beyond budgeting. It's not beyond budgeting. You know, when we started off with that, and we actually at the lab and Klaus, we really spent a lot of time to analyzing that and looking at the differences. Beyond budgeting follows basically a vision of, you basically just let go the organization, right? You don't have, the vision is that decentralized setups are much more advantages of a centralized setup. That is one of these assumptions of these principles behind. That is, in our experience, that is true for some business models, yeah, but that is not true for other business models. If you have a bank, for example, where it all started with decentralized business models, very easy. It's not a complex business model. Basically, you can benchmark and basically the organization has direction. But if you have a more complex industrial company, you have the need to have more orientation, to have more strategy, and therefore you need to work more with guidance, with more guidance. This is where our guided self-control approach comes from. Yeah. In these settings, we say, and this is a big difference really, yeah, that you need still guidance. You need a target system. It's not good enough just to let go and compare basically at hindsight. You need orientation upfront as well. And that is true for some business models in some situations and not for others. You know, so the classic, the true beyond budgeting approach. This is why we believe it really hadn't really materialized in practice so broadly, even though the ideas are good, is because that it doesn't fit for many business models. It needs more orientation in a lot of business models. So and this is where we think our approach is different. It offers really this guidance, and this is why we call it guided self-control. It also is maybe not for every business model. If you have a startup, you have a very dynamic environment, you know, you can go more in this holacracy type of even more progressive approach very well, and can basically leave it out altogether. Yeah, that's possible. But for industrial companies, this is a real stretch to get there. Yeah, they need an extreme strong culture to do that.
So Klaus, where do you see is the size of the company a factor? If it's taking the example of BMW, a huge car manufacturer, how do you see that in terms of size or industry?
Yeah, to be honest, I don't see clear limits in terms of size for that approach. I mean, we have proven that with Hilti, which have now 30,000 employees. We see that Google is steering with these OKRs 60,000 people. So from my perspective, you don't need a rigid system in terms of traditional budgeting in order to run a big complex company. You can also steer a business by these rule-based approaches. But what then is extremely important is the culture behind the organization. And I think Paul was exactly pointing on that aspect also with the non-financial goals and the understanding that these non-financial issues are important. And I mean, you can see it also through the program of this day. So we focused on ethics in the beginning statement. I mean, if you have differences or different understandings in your company, in your organization about these kind of approaches, you will have a problem. So I think it's extremely important to accompany the whole process on a behavioral part. And in a way, this completely also points to the question that you have already showed here. I think this is extremely important for the finance function to be a leader in this kind of transformation process. Otherwise, we will get out of the game because other areas will be on the spot and develop that further. I mean, we have discussed briefly, or we touched a couple of times on the analytics topic. And if you look around, a lot of parts of the company are really good in applying analytics. So the marketing department, the procurement department, the production department. And the more they are applying these analytics, the less they need finance people to interpret the numbers. So if we are not ahead of the crowd, then we will be replaced by robots and we are just the bookkeepers again. And therefore, I think this is extremely important to combine leadership aspects with the finance aspects. And that's, from my perspective, to go back to the point about beyond budgeting, I mean, they were quite early. We have seen a couple of sort of disasters in the meantime, Lehman Brothers, 9/11, now COVID, and so on. So we have seen and experienced very clearly that VUCA is not only a terminology, it's reality. So you need to adapt. And on the other hand side, they were not very clear in their offering. They were clear in the picture of the enemy, saying, okay, budgeting is the enemy. So fighting budgeting is good, but they were not really clear how to replace it or what is an alternative. And I think one need to be more cautious in this direction.
Yeah, that's very interesting, especially also that it goes into the future of our profession, right? How to keep relevant as management accountants in our companies as well, and compared to other departments. Maybe Martin, your comments. I mean, for most of us, yeah, the budgeting cycle has already started for next year or will start soon. So based on your experience, you mentioned you improved a lot of things. Is there maybe one change in this budgeting cycle that you would recommend to change? It's basically, it's a question from Michael.
Well, if you don't go to a radical change, and that's certainly too late for this year, I would scale down teams involved to whatever possible, and try to reduce the budgeting circles. I mean, this going forth and back. If you can set clear targets and make clear, okay, that's your target, and you have to have real good reasons to not meet these numbers in your budget, then you can probably also reduce these budgeting cycles. So reduce teams, so it's personnel costs, not that many hours spent, and clear target setting. That's as a short-term measure, which I could recommend.
Marco, yeah. If I may just add to that from the transformation experiences. I agree with Martin. If you have businesses which are, say, less severely impacted by the corona, have a bit more certainty right now coming back, then and I think yeah, it's probably too late to go back to a more radical change, and this needs to be prepared better. We also see a little bit of pattern emerging, or discussions in companies coming, which are really working under extreme uncertainty at the moment, like many. We don't know a second wave is coming and so on, and they've of course switched immediately in this crisis period to a scenario planning approach. Yeah, of course, that's you have various scenarios you think through, and then have milestones. If this happens, then you do this and that and that. And basically what advice we give is, think about whether this type of approach could be another opportunity in the crisis right now. So in the sense of never waste a crisis, make this maybe a pattern, because that is in a way the essence of what we describe in this other model, which I explained here, as this dynamic sense and respond concept. Basically, you think constantly in scenarios, and basically ask yourself, in 3-4 months, milestone, have things changed? What do we enact right now? How do we change our priorities right now? So this could be a good chance to also work yourself into a more agile situation, and then change planning and targeting systems later on, once you get a little bit more the dust settling down again. But that is just maybe an opportunistic approach for some colleagues or folks who are sitting out there and thinking about whether they would like to really do basically come with the old-fashioned budgeting process right now, when nobody knows where this is going, right?
Maybe if I can quickly, I fully agree. I fully agree with you. I mean, for 2020, we already skipped the budget completely, right, and worked out scenarios, and we even did that for 21. So that's certainly the thing you should do. Should work, because the budget you did last year is not applicable anymore. Maybe a way is to use those scenarios to set the targets. I mean, if you still are in the traditional budgeting process.
Exactly.
Yeah. Maybe Franz, a question for you from Larry. It's also regarding the Hilti case. How has it changed the budgeting games that were before? That's one of the limitations of traditional budgeting approach. Do you see there has changed with the behavior and culturally?
Yeah, definitely. We have really seen that. I mean, as I explained, it goes way back at Hilti when we started to change this in 2005, 6. And ever since, and we have really looked at this very, very systematically now in this case study approach, across the board in all hierarchy levels at Hilti, the feedback is extremely positive with this respect. And my experience myself in business reviews, it had completely changed, you know, from a lot of explanation of why things cannot happen and you know, painting the future dark because of tactical reasons. This was also one of the reasons why I wanted to get out of that. Everybody knew this is basically just tactics, and this changed completely with this change of the system. But also because the change in the target setting system made a lot of change there. It's set a complete different setting, and the orientation and the behavior of management changed. And since then, we observe that what's happening is that positive, you know, behavior in terms of entrepreneurial behavior, you know, looking forward, not explaining why things are not working, but explaining what you did to make it work, basically, is much more pulled, you know, and the other behavior is really pushed back. You know, tactics are really systematically pushed back because there's no reason for doing that, and so it really has been very helpful, yeah.
So Paul, maybe to ask
the culture
you,
had plays always a big role in that, you know. So the culture in that and the behavior of the very top management, as when these things come back a little bit and how their reaction is there, is also an important element. Not just the systems, both things, but they complement each other, yeah.
Mm. So Paul, where do you think, organizations like IMA, what role do we have to play, and maybe also the future research focus of academics like you and Klaus? Maybe you can also.
Yeah, that's a fair question. You know, let's face it, there's lots of research that can be done. There's the research that leads to things like a capital asset pricing model, which is, you know, an incredibly useful tool that people can use in the future. There's research that looks at regulations and say, really, did they add value? But those are more backward looking, and they're important for the profession. But the kind of thing we're talking about here is more forward looking and more real time. And so if we look at what's going on, you know, we have to recognize that academics can be unbiased in their guidance. But what we need to be looking at is partnerships like we heard Franz and Klaus talking about. It's like there's a demonstrated benefit of the cooperation between the academic and the practitioner, because the practitioners really need to be helping identify what are their pain points, and the academics have the resources at their disposal and the time to go research these things. And there needs to be support by the schools. But you asked about, you know, organizations like the IMA. Well, you think about the mission of the IMA. It's the mission of the IMA is to provide research and practice development to advance the profession and provide best business practices. And we have things like the IMA Research Foundation to help provide funding to do these kinds of works, and they have led to such things as, you know, articles in strategic finance that people find useful. The statements on management accounting, the SMAs, a number of those come out of the funding research, the research funding that our research foundation has. So, you know, there is certainly an important role in this partnership between practitioners and academics. I think one of the things from my own point of view, and I'm not sure, for example, if you know, if Franz or Klaus or anyone else has been dealing with this issue, but when you have cooperation, the idea of data sharing and also access to people, because the research is important to do and academics can play an important role, but we have to be able to talk to people, and organizations have to be willing to share information that then also can be shared with others. I personally have worked on articles only to have them not allowed to be published because the company itself really didn't like the fact that they were being talked about. And so while they might be doing great things, that information is then not being shared. So the academics can only do so much. There's got to be the cooperation of the practitioner community to help advance you know, the profession for the good of all.
Good, very good. Klaus, would you like to comment on this question?
Yeah, I mean, I would like to hand over also a little bit to the auditorium, because this is of course also an individual question. So how to develop further their own career and standpoint. And I think as academics, we should deliver value towards the next generation, how to develop further. And what I'm seeing here is a sort of a risky contradiction of two ways going forward. Of course, I have a sort of solution to offer how to combine these views. So on the one hand side, I see the very strong development in the way of analytics and automatization and all these ideas of machine learning, artificial intelligence, and management accountants need to grasp up on all these developments and technologies in order not being laid back or laid out of the organization. So on the one hand side, you need to always update yourself on a technological issue, and as academics we need to study that and provide also solutions. On the other hand side, we have talked the last 90 minutes mostly about behavioral issues, so you need to also develop yourself in terms of leadership things, cultural things, and so on. And what I think is a really valuable target or avenue for research is to combine that and to identify sort of packages. We in research we sometimes refer to control as a package. What are successful packages of combining these analytical approaches with behavioral approaches? And I think this is most beneficial also in companies to see, okay, if we do a specific practice in terms we have discussed here in terms of target setting, budgeting, or whatever, then we need to not combine it with specific others, or it is beneficial to combine it. So sometimes it's extremely helpful to have as an alternative forecast a machine learning based forecast and to combine it with your inside out forecast manually, and then to learn out of that. At other events it's maybe very destructive. So if you align your incentives on plan numbers, this is a bad practice, I would say, because it's hard to estimate what is the right budget point. So in order to find these beneficial or destructive packages, I think this is a very valuable research topic and also a practical design thing.
Okay, thank you very much, Klaus. I see our time is already up. So thank you all of you, Martin, Paul, Klaus, and Franz, for your insights, and also the audience for your questions. I think we can forward some of the unanswered questions to our panelists later, and they can answer them offline, or you can try addressing them during the virtual networking. So finally, yeah, can costs be managed without budgets? Yes, we have seen that it is possible. However, the discussed ideas influence the behavior and culture in an organization. So yeah, I would leave you with that question. Are we going to end up like Dilbert? So now we will have another short break with a video before we hear the keynote from Paul.
What good is having a seat at the table if you don't have the confidence to speak? Get the Certified Management Accountant credential and you'll know how to turn information into insights and data into decisions. So when the boss asks a question, you won't shrink from the spotlight, you'll shine under it. The CMA certification, you've got to earn it. thrill of auditing is gone? You give yourself a bigger challenge. Get the Certified Management Accountant credential and you'll be connecting the dots, not counting them. The CMA certification, you've got to earn it. Insights that blow everyone away? Then get the Certified Management Accountant credential. You'll look at statistics and see strategies. You'll look at data and make decisions. The fact is, the CMA gives you a lot of power. So please, use it responsibly. The CMA certification, you've got to earn it. Is there a low ceiling on your career? Then get the Certified Management Accountant credential and raise it. The CMA certification, you've got to earn it.
I earned the CMA certification at a very young age, and that helped me have the confidence to move across different industries and roles when I had the opportunity. It created this kind of solid ground that I could hit the ground running once I started any job.
I heard about the CMA program about 12 years ago. I was looking for a certification that was also recognized internationally. And in the Netherlands, organizations like Philips and Shell and ExxonMobil were promoting the CMA program.
To me, the CMA certification provides a clear signal that we would have a management accountant who is well-versed, well-educated in all the fundamental elements of management accounting today.
The knowledge from the CMA certification helps you tremendously. If you want to go for digital change, you need to automate your processes. And if you are not able to analyze these processes in a very accurate and good manner, you won't succeed in your digital initiatives. That's why CMA holders are very well positioned for leading digital change.
It's not only about the numbers, it's really about that sweet spot where technology meets human interaction. It's really about understanding the bigger picture and being able to explain that bigger picture to others.
Having the CMA certification gave me a huge advantage when it comes to my career progression. The IMA gave me a brilliant platform to add value to the finance profession and play an active role in it.
Artificial intelligence will definitely be able to do some things better than humans, but I think the overall picture still has to be made by human decision makers. So overall, I have a very positive outlook for the future.
When you've got a CMA, it says to the world, I've been through the education, I understand the concepts of management accounting, and I can help apply them to today's and tomorrow's technology.
welcome back. I really enjoyed those clips. Also nice to see Vadema and Pascal Peter sharing their views. They're also joining the conference today, and some of you might even have the chance to talk to them in the virtual networking. But first, we are looking forward to the keynote presentation by Paul on the evolution of 4.0. In this month's issue, IMA Strategic Finance magazine has published Paul's latest article on the topic. I'm sure he will delve a bit deeper into it in this session. So Paul, the floor is yours.
Thank you. I'm waiting for, okay, getting control of the slides. Okay. Well, okay, hello to everyone. And I certainly welcome you to the final presentation of what has been up to this point an excellent virtual conference. From my own end, I would just like to point out that you should feel free to use the chat with each other and interact with each other during my presentation, but I'm not going to be able to monitor the chat while presenting, and so I'll not see any questions that people might post there until the end. Now, of course, some of you will be in my networking group after this session and be able to ask some questions of me then. But now on to my presentation. I'm pleased to have this opportunity to speak to you about a topic that I became immersed in during a research sabbatical 2 years ago. And it kind of goes to the question about, what role can research play and organizations play? This is a topic that's evolving quickly, and I was fortunate to have several companies give me access to their people and share with me their experiences to help this research effort. And we both mutually benefited from this cooperation. And this benefit comes from my belief that we are now standing, what I would say is at the dawn of a technology revolution. It's a revolution that is fundamentally changing the way we live, the way we work, the way we relate to one another. Its scale and scope and its complexity, it's a transformation unlike anything that we've ever experienced before. And we have this idea of globalization, right? Globalization is changing the influence of space, time, the way we work. So as the world gets smaller and space and time are being compressed, we're seeing pressures to move ideas into tangible products and customize services in a much shorter period of time than we've seen in the past. We're also getting a growing economic interdependence of countries worldwide through increasing volumes and variety of cross-border transactions in both goods and services. We're seeing more rapid and widespread diffusion of technology, all resulting from these digital transformations. So I'd say, to put it simply, managers are realizing that delivering goods and services that the ever more demanding customers want, and doing so in increasingly global markets and at a cost that preserves margins, is becoming increasingly difficult and can no longer be done by simply doing more or doing the same old things. What we're seeing is that disruptive technology is putting companies out of business very quickly. You see by the fact that companies are failing at rates higher than ever before, and that's before the COVID-19 outbreaks. In 1958, the average lifespan of a company in the S&P 500 was 61 years. In 2011, it was down to 18, and today it's even less. And it'll be shorter in the future. In fact, there are predictions that by 2026, the lifespan is going to be maybe about 14 years. And at this current rate, 75% of these businesses could be out of business by 2027. And so I've got a quote from Peter Drucker, who's identified as the founder of modern management. And he said, within 5 years, if you're in the same business you're in now, you're going to be out of business. And it's hard for me to argue that point. I believe that to succeed in this 21st century environment, 20th century practices are not going to be enough, and they may not even be proper. So the question is, what do we do? Well, Industry 4.0, also known as I 4.0, it's viewed as a key enabler to overcome these challenges and to take advantage of emerging opportunities. It was made possible by an increasingly global network of interconnected objects that can collect and exchange data. Now, you may know it by different names. In the United States, the industrial internet or smart manufacturing. I 4.0 is the basic framework for the Made in China 2025 initiative. Belgium, Factories of the future might be the term, while Sweden and the Netherlands call it smart industry. But it really doesn't matter what you call it. The global movement has these different names, but the underlying concepts are the same. And it has been referred to pretty much globally as a fourth industrial revolution. Now, while I4.0 has been around for nearly a decade, my experience of the past few years tells me that doesn't mean it's a concept that is really widely recognized. So I would like to gauge your familiarity with the first poll question. So if we could release our first poll question. All right. So this question, what is your level of familiarity with, with Industry 4.0? It could be a very familiar, I'm somewhat familiar, I've heard about it, but I'm not that all familiar, and I'm happy to learn more. Again, it's maybe something that people have heard of and maybe they haven't. So quick question. And we'll just give it a few more seconds to try to get some results. All right, can we see the results? All right, interesting. Only a little less than 20% are very familiar, and nearly 50% have heard the concept that don't know a lot. So this is interesting, and I don't want to say it's discouraging, but I'm glad that we have this opportunity, and I'll be talking a little bit about our resources that can help you out. So if we can close this, the results, and I will get the. And I should have the back. Okay, oops. There we go. All right. Now I mentioned that these results, it's important. These results, I won't say they're discouraging, but the fact is most everyone has at least heard about this, because I4.0, it's not coming. It is here, and it is on the radar screen of managers and C-suite executives around the world. Now, you might wonder why that is. Well, what it has to do with is the fact that there's many promised benefits. The adoption of I4.0, it's not about adopting technology. It's about finding new and more efficient ways to capture value. Now, the opportunities to capture value, they're not the same for all companies, or even segments or divisions within the same company. But in general, we do see opportunities to increase speed, flexibility, efficiency, and quality. And that's just in terms of the idea of the products and services we're providing to customers. So yes, a transformed digital future is emerging as a certainty in many industries. And it's true that a company might be able to realize several or even most of the benefits listed here on this slide. But not all of these, and certainly there are some organizations that may not realize any of these. What I can tell you is that no one will realize any of these results without overcoming some challenges. So the adoption effort for Industry 4.0 should be approached thoughtfully, and organizations need to prioritize innovation and strategic investment or risk losing competitive advantage. Now, what does that competitive advantage look like for some companies? Consider Harley-Davidson. Within their Industry 4.0 enabled factory, Harley-Davidson can build 1,700 different bike variations on one production line and ship an individualized bike approximately every 90 seconds. And they did this while reducing costs and increasing margins. Now, as good as this is, Harley has nothing on Trump Group, which is a German industrial machine manufacturing company. Their 4.0 approach has transformed the production of punch tools. Now, I don't know a lot about them, but I did a little research, and apparently there are 31 million potential variations, and 45% of the customer's orders for individualized tools are needed within 24 hours of placing the order. Well, that's pretty impressive, and that certainly is a competitive advantage if they can fill those orders. And we see business models changing in many industries. Companies today, they're not just insurance companies or banks. Rather, They tout themselves as technology companies that provide insurance or banking services. Now, let me assure you that this is not a technology and not a manufacturing presentation. It's a talk about how management accounting is fundamentally changing as a result of these new trends and developments. You see, I-4.0 technology investments require the same in-depth quantitative and qualitative analysis performed for all other major investments. It includes consideration of the short and long-term costs and benefits. In other words, what's the net value add to the business? And this means management accounting is a really important link between strategy and operations, because operations are the processes involved within the business model to successfully execute a chosen strategy. Now, when business organizations respond to challenges of managing change, they're faced with choices. Which of the many management methods and techniques should we use? What systems would be most efficient, most effective? Now, remember, the managerial function involves using information for better planning and control. Who better than management accounting to play an important role for effective and successful strategic change at all levels, whether it's a chosen business model or a changing business model. And the impact of this transformation is not limited to, as I mentioned, the manufacturing sector. I say this because in addition to Industry 4.0, we see, right, Quality 4.0, advancing the traditional quality methods with new technologies to optimize operational excellence and increase worker safety, which is very important. The technologies include cloud computing, artificial intelligence, connected devices. There is also Supply Chain 4.0. It's the use of sensors and advanced robotics, big data, and analytics to integrate and coordinate activities throughout the supply chain. We see Energy 4.0, the use of connectivity and I-4.0 to change the way energy companies and utilities exchange and interact with their customers, to the development of smart grids, management of renewable resources, and distributed generation of power. Big area is Agriculture 4.0, using sensors to monitor fields and crop conditions, using drones to precisely target applications of fertilizers and insecticides, and field-to-table tracking of crops. We have Retail 4.0, which is developing a more efficient and productive business practice through the use of technologies as big data, cloud computing, and additive or 3D manufacturing, and augmented reality. Healthcare 4.0, using the various elements of connectivity to capture the vast amounts of data and analyzing that data to make better informed healthcare management decisions, while also allowing for improved efficiency and cost control. We also have Pharma 4.0, and I have a few more examples related to this, but this is a collection of analysis of the unstructured and dispersed data within highly regulated production and distribution process to increase quality and productivity. So when you add that to the general idea of Industry 4.0, we have is what I call a 4.0 world, a world that we're living in. And what's making all this possible is the interconnectivity of the Internet of Things. But I think it's a better term is the IOPT, the Internet of People and Things, because the technology without the people, as we've heard through some of the other presentations today, it doesn't accomplish much. So let me give you an example. When organizations choose to adopt Industry 4.0, they're most likely going to start with a pilot. The pilot project usually takes place within a silo, and in the US at least, a very common first application relates to preventive maintenance of a machine. Now this example comes from Oxys Corporation, which is a company that was kind enough to share information with me as part of my research project. Oxys worked with a pharma manufacturer that had known quality issues and had occurred over several years. And they'd been collecting a lot of historical data, but hadn't been doing much with it. It hadn't been analyzed. The company was simply reacting to significant events as they occurred. So it might be reactive maintenance, reactive whatever. Oxys was brought in to examine the historical data and implement a new monitoring effort. The goal was showing that the collected data could be analyzed and find a way to make predictive maintenance a reality. That was the goal. The goal was to be proactive rather than reactive. Now, the data might indicate that what happened earlier in the process might have led to the adverse effect. But it took engineers and scientists to interpret that data and ultimately make a decision. The impact, it was astounding. Right? So they were able to identify within 30 minutes whether or not the batch was going to fail. And this batch production process took 7 days. So think about that. Right? Think about what we've heard some about the budgeting. Right? Imagine the financial implications for cost of quality and of freeing up capacity and being able to plan for more productivity, because 7 days of production time were not wasted on a bad batch. And remember, this was just one pilot project focused on one piece of equipment. So companies have learned that to capture more of the value, they have to move beyond the siloed approach and adopt 4.0 practices within all 4 walls of the organization. And so consider a second example from the pharma industry. Now, pharma is an industry that has been using batch manufacturing for more than 50 years. You may not be surprised that the manufacturing approach is lengthy, because after each step in the process, production is typically stopped so a substance can be tested for quality assurance. Personally, I find that pretty reassuring. Now, in 2016, Janssen Pharmaceutical, and they're part of Johnson & Johnson, they received the first US FDA approval for a switch from a batch to a continuous manufacturing process. Now you think about batch to continuous. It seems pretty something that people would do, but it needed approval from a regulatory agency. And it was for a product called Prozista. Now, included in this approval were elements of real-time release testing made possible by the development of their 4.0 capabilities. Then in 2017, Janssen announced that the European Medicines Agency, the EMA, had approved continuous manufacturing with real-time release testing for the production. Okay, another step. Then in January of last year, so just a little over a year ago, the US FDA approved their surrogate digital dissolution model. And okay, I'm not a pharmaceutical engineer. I don't know exactly what that means, but I do know that that approval allows the tablets to be released as soon as manufacturing is complete and no laboratory testing is needed. It goes off the line into a package and out to the customers. So think about the benefits that they might expect from this. Well, with optimal resource allocation and reduced manufacturing complexity, they are able to save space and reduce waste, which frees up capacity. The improved quality and lower process risk has led to more continuous processing opportunities, which is a potential new set of revenue streams. And the shorter manufacturing and cycle times led to reduced environmental impact as well. So it's not just financial, it's environmental impact. The projected long-term benefits were a 33% increase in yield due to waste reduction and an 80% reduction in manufacturing and testing cycle time. Now think what that does for cost of quality and average unit cost projections for this product when they're preparing a budget. Hey, but why stop with just one production line? So enter Johnson & Johnson's Manufacturing for the Future initiative. Johnson & Johnson has 3 operating divisions: consumer products, pharmaceutical, and medical devices. I mentioned Janssen, that's part of the pharmaceutical side. These 3 segments are run as distinct businesses, and while Manufacturing for the Future is a company-wide effort, each segment looks at applying 4.0 differently because of where the opportunities exist. So let's consider an example that goes beyond the 4 walls of the organization, and it comes from the medical device sector. Now, this sector is all about embracing trends and capitalizing on the digital revolution to bring customer experiences unlike anything before. Sounds like motherhood and apple pie. It runs across all segments, but it takes into consideration the unique needs of all. Now, let's talk about how this one-size-fits-all approach is leading to a transformation. Consider what happens within an operating room when a patient comes in for, let's say, a planned knee replacement, something my brother just had done a few days ago. Typically, When a surgeon performs knee replacement, he or she doesn't know exactly the size of the knee until the patient gets in the OR and the procedure's begun. Then you can actually determine the size of the implant. So think about this. To prep the OR, the hospital needs to have all potential sizes sterilized and ready to go. This causes work for the staff in sterilizing, setting up, ensuring all the instruments are present, and for the manufacturer, in this case J&J, they're putting out a lot of inventory. They're putting a lot of inventory on the shelf, and that's tying up working capital. It also takes up precious hospital storage space. And then at the end of the surgery, the OR nurse has a lot of work to do to clean up and turn the OR around because of all the excess items that were in there. But what if you could come up with a way to satisfy the patient need while minimizing cash outlay for having so many units on the shelf? And how can you leverage technology to integrate the phases of this process for a better outcome for all? Well, they have a advanced case management system that addresses this problem. It brings solutions to its customers while optimizing the supply chain. Across the top of this diagram, you're seeing what the way things are done often today, and it does look kind of messy. And so what we're seeing across the bottom is a different story. Process where x-rays are done to analyze the joint size and determine which of the SKUs would likely be most appropriate for this specific surgery. And then scheduling is the next step. It's when you know both the size and the joint you need, and then you also are able to know the surgery schedule, you can really get efficient. This information is pulled into J&J's advanced case management software, and it sends a demand signal to J&J just in time to get the right product to the surgery site at the right time. Finally, optimizing all of this allows for the right instruments to be sterilized. Today, hospitals often need 3 sets of sterilized instruments when only one will ultimately be used, but it really depends upon this idea of uncertainty with respect to size of the implant. Now, all these items get sterilized, and there's extra work. So in summary, the connectedness across the process from intake to surgery allows for benefits throughout the value chain. For hospitals and physicians, it reduces costs to serve by reducing inventory levels, sterilization costs, and creating OR efficiencies and driving profitability. It helps differentiate J&J and helps position them as a partner of choice in orthopedics. Now you add to this J&J's joint investment with Google, and they recently formed a company called Verb Surgical. And what you see now is a commitment to innovations in robotic surgery that allows the surgeons to connect to an end-to-end platform, which includes pre-operating planning, intraoperative decisions, and post-operative care. So we have a win for the manufacturer, the physician, the hospital, and the patient. And one thing I want to point out is that this example is not about manufacturing. It's about sharing data across the continuum of healthcare delivery. And so maybe you're starting to see that the greatest value, the greatest opportunity, the greatest disruption will come from adopting I 4.0 principles across an entire supply chain. Now just consider what happens to a linear supply chain when 3D or additive printing is used. Aprecia is a company that has the first, and I believe still only approved 3D printed pharmaceutical tablet in the US. It's a tablet with a unique structure that allows it to disintegrate rather than dissolve. The structure cannot be achieved through traditional manufacturing methods. Less about the 3D printing, notice how the use of 3D printing affects some elements of the linear supply chain. Right? Some are bypassed completely, meaning that some members of this supply chain face disruption and possible extinction if they cannot adapt. And then, why stop there? As one consulting firm put it, forget the long lines at a pharmacy. Someday soon, people might be making their own medicines at home. That's because researchers have tailored a 3D printer to synthesize pharmaceuticals and other chemicals from simple, widely available starting compounds that are fed into a series of small water bottle-sized reactors. They say this work could allow users to synthesize almost any compound anywhere in the world, or even outside this world, as companies are now looking at how 3D printing will allow astronauts to print the machines themselves to create the compounds to be able to support them on multi-year journeys to places like Mars. So there are certain implications for pharma companies and their place within the value chain. So what does all this mean? It means there's a scope of Industry 4.0 adoption. It can run a continuum. You start with this completely siloed focus. The silos are a great place for pilot studies to test technology and extract value. And that was the Oxys example I gave you. But without moving outside the functional boundaries, the potential benefits of I4.0 adoption are limited. Now, why is that? Well, because senior leaders, they have a valid, but a diverse perspective on I4.0 capabilities. And it may be narrowly focused on just their piece of the business, be it engineering, product design, manufacturing, supply chain, or even aftermarket service. Without an apparent comprehension of the interconnectivity true I4.0 transformation requires and the benefits it can deliver. But taking advantage of the interconnectivity in combination with the lessons learned from the silo-based projects can allow management to scale up the implementation effort to within the four walls of the organization. But remember, the opportunity to capture value will have to be identified and evaluated. And while this level of implementation offers greater benefits, it still falls short of capturing the greatest potential value. As with the J&J medical device example, organizations do not stand on their own, and it's easy to argue that the value of digital transformation goes beyond the results of any single organization. If you look at the entire value chain and ecosystem within which any organization resides, there are many stakeholders involved. And the greatest benefits and opportunities will come from large scale and proactive integration across the enterprise, its customers, its suppliers, the products and services they offer. The ability to unlock the power of data for future value creation means connecting, combining, and sharing data will be essential. Of course, for this to happen, data will come from various ERP platforms and other systems. Piecing together the I4.0 business case across a value chain requires planning for data from various functions and value chain members, and it may not be organized in exactly the way you need. So there'll be a lot of work to be done. And there are also risks associated with all that sharing of data across the value chain. But before talking about the risk and challenges, I'd like to see where your organizations are with respect to the implementation continuum. So I'd like to release a second poll question now, please. We've got a few more options than in the first, but basically it's saying, are you adopting 4.0? And if so, is it being done at a silo pilot project level? Is it advancing to within the entire four walls of the organization? Are you including the entire supply chain? But perhaps you've not started anything at all and you're thinking about it, or it's not even on the radar screen of adopting I4.0 at all. Since we have, this time 5 options, just take a few more seconds and we'll release the results. Okay. Can we see the results? All right. Well, we have a few that are including the entire supply chain. That's great. And if we take a look, we've got 10, 20, 30, we've got quite a few that are using I4.0, even if it's just at the pilot phase. But we've got nearly 40% are exploring the opportunities. And I'll be interested in hearing more about what people are doing, and perhaps some of you will be in my networking group after this is over. So if we can close the poll. Oh. Okay. And sorry about that. Like some others, I am advancing too quickly. Okay, there we go. All right, thanks. All right. So what I would say here is, I 4.0, as I mentioned, it's on management's radar screen. And so I might say that the I 4.0 race has begun to capture some of the value that comes from all this connectivity. But this race is not meant to be a sprint. Rather, it's more of a marathon. And like running a marathon, a thoughtful approach to running the I 4.0 race is going to be required. Now consider this. We've been working for some years on an electric automobile which will be cheap and practical. Cars have been built for experimental purposes and we're satisfied. The problem is building a storage battery light enough to operate without long distances without recharging. Now you might think, here we go. This has got to be Elon Musk talking about Tesla and what he did. And of course we would be wrong, because this is actually Henry Ford talking about how his work with Thomas Edison over 100 years ago. And so that was the problem then, and they were right on the verge of solving the problem of the battery over 100 years ago. It just took 100 years in Elon Musk to finally solve the problem. And this is important to point out, because there's a lot of hype behind I 4.0, and executives with I 4.0 on their radar, they're going to need some guidance, and they're going to have to be reined in a little bit. Now, this is the kind of guidance that you might be able to help. Guidance to help those in the C-suite to become more realistic. Yes, think big. And there are resources out there like this publication, which are readily available on the internet. I just happen to show this one because it's one I co-authored with KPMG a little while back. And like the Ford and Edison collaboration, cooperation is needed. And so now we might have what we'd say is a marathon relay race. But hey, let's make it more difficult. Let's call it a marathon relay race with hurdles, because there are hurdles or obstacles that need to be overcome. The Boston Consulting Group, among others, have identified some of these hurdles, such as defining the strategy for 4.0, rethinking the organization and its processes, understanding the business case, conducting the pilots, but convincing organization that action is needed, and then using change management, which includes adapting the company culture. And the most important thing we're hearing is finding and retaining the right talent, the people that will make the value capture from I 4.0 a reality. And make no mistake, the management, accounting, and finance professionals can be an important part of that talent pool to make this all work. And so, this is from the KPMG publication I noted. It basically is telling you technology is required. We recognize that. But you know what? Technology is not sufficient. We've got many other elements that are important. So there's a role that we can be playing, because the role of our profession is to add value, value creation. And we can play an increasingly important role in digital transformation by helping answer questions like, is there a commitment to a digital customer experience? Are resources committed to training in order to make this all work? Is there even a digital strategy? So these kinds of things are questions, and these are all the elements that have been identified as what help make an adoption of I 4.0 possible. Of course, we can't go anywhere without all the data. And the data has become recognized as potentially the world's most valuable resource. It's no longer going to be business as usual in any economic space. But what companies have to be aware of is this thing called the drip syndrome, being data rich and information poor. Because just because you have data doesn't mean you have information. And information is where the real value comes from. Think about as the internet evolved and businesses changed, consumers and customers entered all kinds of information, like their names, address, phone numbers. They subscribed to a website. They received information. Companies started to monitor things like you visited their website. How often did you visit? What other things did you look at? Other companies like the Googles and Yahoos of the world, they knew all the sites you visited under their search engine, and they could use that data to share and grow their business and share it with others. Social media sites like Facebook added another layer to this collection. And then you have general business companies, be it a doctor's office, an insurance company, a bank. You know, they had data, but they added another layer. And as layer and upon layer is added, more and more data is being collected. But now what about the idea of consolidating, commingling, storing, collecting, disposing of that data? Enter regulations like GDPR in the EU, and you have restrictions on what businesses could and could not do. Failure to comply could result in hefty fines. But perhaps more importantly, business should recognize that if they were to fail to have the proper data governance, that is a liability which could undermine their trust. It's easy to become non-trusted in a data-rich business environment, and trust is really an invaluable asset in this world. And so data governance is extremely important. There's also the strategic risks associated with data collection and data sharing, which is part of enterprise risk. Now, as an example, in 2019, Google engaged a large US healthcare system on a pilot project. It collected and crunched detailed personal health information on nearly on millions of people across nearly 21 states. They codenamed this Project Nightingale, but within 2 days of the announcement of this project, there was a US federal inquiry as to what's going on here in terms of collection and use of this data. So what we have here is a strategic initiative that developed and showed enterprise risk. So the COSO Enterprise Risk Management Framework, it can provide us some guidance on what we should be doing. Right? And if we look out, the COSO noted in one of their recent 2020 releases, and this just came out within the past few months, said risk appetite must be flexible enough to adapt to changing conditions, helping an organization to remain relevant, and those who anticipate and understand their risks when change happens are better able to embrace the change and be more agile in these changing conditions. It sounds like applicable wisdom for this 4.0 world. And we also have to look beyond what is legally allowed with respect to the use of data to what is morally or ethically the right thing to do, right? So there's the collection, the storage, the use of all that data, but what do we do with it that's proper? So ethics in this digital age. And I think as members of the IMA, we understand the importance of an ethical framework and a code of ethics. And so we're seeing that as all this data is being tracked, and there's this idea of customization and mass customization, which provides competitive advantage, we've got to be respectful of what all this data is going to be used for and why they're collecting it at all. So hopefully organizations will adopt a code of ethics that will govern the collection and use of data. And again, as we as IMA members know, a code of ethics is certainly important. Now, one upside to all this data collection is the accelerated invention of new products and services that offer ways of tackling some difficult problems like climate change, pollution, energy demand, and the pressures of urbanization and problems that accompany aging populations. Now, according to the International Integrated Reporting Council, the IIRC, one of the objectives of integrated reporting is a more cohesive and efficient approach to corporate reporting that draws on different reporting strands to communicate the full range of factors that affect an organization's ability to create value over time, and investors and executives are taking note. Now just consider an announcement last year by the Business Roundtable. They announced they were releasing a new statement of purpose of a corporation. It was a statement signed by 181 CEOs who committed to leading their companies for the benefit of all stakeholders, not shareholders, stakeholders, customers, employees, suppliers, communities, and of course, yes, the shareholders. So you combine these capabilities and the changing environment, and what we're seeing now is IIRC has a comment period for new process potentially, and it was just announced again in May. You know, the comment period open to comment on the new framework that they're looking at. So what we're seeing here is this thing that we might call is green swan events. Okay, what happened just and I came across this just a few weeks ago. Chevron, which is a large oil company, they got a wake-up call. A majority of their shares were voted in favor of a proposal that was opposed by management. It was a proposal that the company issue an annual report, right, that discloses its lobbying expenditures on climate change and explain how they align with the goals of the Paris 2015 Climate Agreement, the agreement that set goals of holding the increase in global average temperatures to less than 2 degrees Celsius. Now again, this was against management's recommendations. Part of the reason for this proposal was the belief that insufficient information is presently available to help investors understand whether Chevron is working to ensure that its lobbying efforts align with the Paris agreements. So what we're talking about here is this potential for increased integrated reporting to respond to shareholders and executives' initiatives to focus on things other than what the shareholders, the creation of wealth for shareholders. So I have provided you with several I4.0 implementation examples, but just look at our own Strategic Finance magazine. We can see the elements of I4.0 are all around us, and it's making us a 4.0 world. And I hope you have started to see where you can play a role in successful 4.0 implementation. Help your organization to capture value. And as Marco mentioned, there's the one that just came out in the June issue that is based on some work that I did with a co-author at Johnson & Johnson. Now, if you look, you'll see that implementation efforts over the past few years have provided some lessons, and I would argue an opportunity. Remember my earlier comment about the need for talent to make I4.0 adoption successful. So why not seek to position yourself to help your organization implement the various lessons that are in place? And so you're being presented with an opportunity, one that is requiring you to stay informed, to stay relevant, and the IMA is here to help you. Excuse me. So if we look, we have publications. Here's just a couple examples. So if we look at these, we've got accounting competencies in a digital age. We've got some of the things relating to a strategic analysis, achievement of superior and sustainable performance. Right? So you've got this opportunity. The IMA is here to help you with these. And one thing that you will probably be becoming aware of soon, like the COSO with their revision, and like the IIRC, who is coming out with new things, it'll be announced today, or it may have been announced while we've been on in this conference. This is a brand new publication by the IMA. Digital Transformation, Business Reporting in the Fourth Industrial Revolution. So the timing is perfectly aligned with today's conference. And again, I was notified that the press release is going out today to announce it. So it might be there for you to see already. I just haven't had a chance to look yet this morning. But remember, my quote by Peter Drucker, within 5 years, if you're the same business you're in now, you're going to be out of business. Well, consider a modified version. Within 5 years, if you're the same professional you are now, you're going to be out of a job. As I said, a technology revolution is dawning. New technologies will result in the elimination of many management accounting positions. But there'll also be opportunities, and new ones will be created. The key will be a shift from financial reporting and stewardship to becoming a business partner and a strategic enabler. Successful management accountants will be those that enable organizations to perform better. So, I would say that finance and accounting is being significantly impacted by changing technology. The role is evolving from becoming that of a record keeper and compliance officer to that of a strategic business partner. It is as if we, the accounting and finance professionals, are standing on the edge of a cliff. This new role that we potentially could fill will require changes and rebalancing in the skill set possessed by us, the professionals. Some current skills will be less important, others will become more important, and new skills will be needed. But how do you get yourself and your organization to the position they need to be have the future that you want to see? Well, I would say, be a person that envisions the future. Be a person that inspires the change that is needed and helps guide change. Be a cross-functional collaborator. Have the business acumen to be able to talk to people across your organization and within your supply chain. Be a guide to the governance and compliance. Identify what's important and help measure what matters. Of course, analyze the data that's there. Now, this may sound like a lot, and it's like, how do I have all these skills? What can I do? How does anyone do all of this? Well, you know what? All these items are element of our IMA competency framework, which was showed in that video just a minute ago. So it's there, it can be done. Use the IMA competency framework as your guide. And so what I would say is you also then need to show you're prepared. So perhaps the keystone that will complete this bridge is objective verification that you have these skills to show you're prepared. So the CSCA, CMA certifications. Now, with that, I'm going to say thank you to those who have set this conference up. I look forward to talking with some of you. I don't have time for questions, as I'd mentioned, but those of you who are in the networking group, I look forward to talking to you, and I turn it back over to our hosts.
Thank you very much, Paul, indeed, for this very interesting presentation. And it's clear that we not only have to get through this crisis, but we have to really embrace the future, which basically already arrived. And I think, yeah, your presentation is absolutely a call to action for all of us. And thank you for the insights in how we can actually prepare for that. And just want to mention it, we talked about it several times when we prepared. I dearly hope that you can come to Switzerland actually, when it's both safe and practical to do so. And we'll share this wonderful view together, and we'll have also a nice face-to-face event in that case. So we're heading towards the end of the conference. This is usually the time that people start looking at the bar that's being prepared. Please bear with us for a few minutes as we have 2 more slides, and then we'll head into the real networking portion of this conference. Really a very warm welcome to all our speakers. You see here on the picture, I don't know if I can show this also here in front of the camera. No, it's kind of hidden, unfortunately. All our speakers get a unique Swiss-made pen from the legendary brand Caran d'Ache as a small consideration for the effort you make for us, the wonderful presentations you gave to us. And I just want to highlight that you know, all of our speakers do this on a voluntary basis. They make time out of their busy days. Paul got up really early this morning to be present for us in the United States. And an organization like IMA and the Swiss chapter absolutely depend on volunteers to make this thrive. So for everyone who's not active, let this also be a call to action. Even if it's very small things like speaking at a conference or hosting IMA at your company, for example, please do consider that. Also, particularly warm thank you to Marco, who put a tremendous effort in organizing this event, and as well some people you may have seen or not so much, particularly Bernardine and Leanne from IMA, who have spent a tremendous amount of time preparing for the conference, doing a lot of the preparation, organization, technical things, and the fact that everything went pretty smooth, except for a few minor connection issues, is really testament to their amazing work. As I said, we have 2 more slides. So just give this back to Marco now, who will talk about the upcoming events in Switzerland, and I look forward to seeing you in the networking portion.
Yes, also thank you very much, Hessel, for all the organization and the effort you put in to make this a successful event. So I would like to update about our upcoming events. Please follow the IMA Switzerland chapter and IMA Europe on LinkedIn to be up to date on our activities. and also latest news that we will post there. Actually, next Monday, we will have our annual general members meeting. So it's online too, so please join us there. And save the date for the other events we have planned for this year. Join us for a joint webinar with a CMA Elite Club in China after the summer, for joint events with ACCA on predictive analytics, and for another event together with the International Association of Controllers on agility and resilience in finance. In addition, we have already started planning for next year, so which includes an event at the top-ranked business school, IMD, in Lausanne. We're looking forward to meet our members again, and also hopefully in person soon. So as a reminder, by attending today's event, you've earned 4.5 CPE credits. For IMA members, your CPE will be loaded directly into your membership accounts. So Bernardine will now guide us to the virtual networking. Bernardine.
Good, everyone's still on, still a lot of people. What an exciting day. And I'm pleased to guide you through the networking session that we've all been looking forward to. Just a quick disclaimer, the virtual breakout sessions are not being recorded. However, pictures may be taken randomly in each breakout room by IMA staff and volunteers. Please turn off your camera if you do not wish to share your image. And you are reminded to follow basic rules of internet etiquette, especially in this virtual networking session. You've all been pretty good at that all event long, and non-compliance will result in a removal from the event. Please click on the link to the Zoom breakout rooms as indicated in the chat box. I will put that on shortly. You will then be assigned to a particular breakout room upon arrival for the duration of the virtual networking session. We hope you enjoy the conference and see you soon.